My name's Joel Elconin. I heard that. My name's Joel Elconin, and I'm the old guy here. I've been in the markets for a long time. I work with a firm called Benzinga. It's a financial media firm, and I host a daily podcast with them called Pre-Market Prep. That's how I got to know Jeremy. And we cover the markets. We try not to make it like too intense on a day-to-day basis. We try and talk about different time frames in investing, and I think that's a very important thing. So do podcasting for them. I also do some writing about the markets, and I've been around for a long time. I cut my teeth on the floor of the Chicago Mercantile Exchange back in the late 80s and early 90s. I've traded on desk. I've done independent trading. I've tutored a lot of different traders slash investors, and met Mr. Newsom through that, and just an incredible guy. And when he asked me to help out with your event and the cause, I wasn't really sure where I fit in with it all, but I'm fitting in now, and I could talk about just about any kind of investing, from short term day trading to long term investing in wealth building. So I got a lot of things to say along those lines. You just tell me when to shut up, okay?
Sorry, I was muted. Yes, I got you. All right, awesome. Isis, go ahead and unmute yourself and introduce yourself to everyone and what you would like to cover today.
Sure. Good evening, everyone. My name is Marlene Jean, also known as Isis. I am a registered nurse. I've been a registered nurse for about 25 years. So I will be speaking on the holistic part of wealth, on how holistically wealth is actually, financial wealth is actually a part of wealth, but it's not the only types of wealth. So how you can actually manage all the different types of wealth in your life in order for you to have a good financial stance, sound portfolio, including your body, your mind, your spirit, and everything else.
I love it. I say this to my students all the time. Those of you who've worked with me in the past, right? Building wealth is a spiritual journey. It's a mind, body, and soul journey, right? You have to become the person. You have to step into that person to be able to handle a certain amount of wealth, right? And so Isis is going to cover that. All right, Juliana, take it away. Tell the people who you are, what you do, and what you came here to talk about.
Awesome. Well, thank you so much for allowing me to be on your panel today. Katiana and I go back a little while from before, and I've seen her growth, and she's amazing. So what we do at Cox Marketing Agency and what we're going to be talking about today is personal branding. There's a lot of you that are entrepreneurs here, and there's also a lot of you who are in the corporate world. You are growing yourself. So the world is ever changing, and you need to be online, and you need to voice who you are as much as possible, because at the end of the day, you are your own brand. So we're going to be talking about LinkedIn, the power of LinkedIn, and growing yourself as a corporate person, growing that ladder and scaling above that glass ceiling. We're also going to be talking to entrepreneurs who have their own business and unfortunately do not have that clarity and know what to do when it comes to marketing their own business. So we're going to clarify a few things and bring you a lot of aha moments on our sessions today.
Thank you so much. We are waiting for one more person. She's having trouble getting on. It's okay. This is the new world, right? There's always technical difficulties, but the show must go on. So since Joel is on a time constraint, all right, we're going to direct our questions to Joel first, okay? You guys can write it on the chat. So how is this going to work out, all right? You guys are going to write your questions on the chat, and you're gonna direct it to someone. We want to direct most of the questions as of right now, mostly to Joel, okay? To ask him anything about long-term investing, right? He was part of the Chicago Stock Exchange. Is that what I heard, Joel? Is that what
Chicago Mercantile Exchange?
Okay.
That's where they, has anybody ever seen Trading Places? Or are you guys too young? You guys probably weren't even born when that movie came out.
Is that with Eddie Murphy?
Yes.
Okay, yes. When I was a child, I don't remember it, but
Yeah.
yes. Okay, beautiful, beautiful. So while the questions are pouring in, I just want to introduce what it is that we're doing, why we're donating. I'm going to share the link, okay? And then we're going to open it up for questions. So get your questions ready on the chat, okay? So that when I'm done talking about, doing my spiel and who I am and what I'm here to do, all right, you guys, your questions will be ready, okay? So those of you who don't know who I am, my name is Katiana Carre, Katiana Carre. I was born and raised in Haiti. So Haiti is me. I am Haiti. Haiti is a part of my soul, my being. My ancestors are Haitian. My mom's Haitian. Everybody's Haitian. I am Haitian, okay? And so this is a personal matter to me. I also took it upon myself to teach professional women, specifically within the Haitian community, to teach them basics of investing. Because a lot of us, there's a common misconception within the minority community that everybody's starving or that everybody's on survival mode. Actually, no, a lot of us are thriving. A lot of us have a lot of money in the bank, but we just don't know what to do with it. We just don't know how to make it work for us. And so that's where I come in. I bring in that education. I take all of that Wall Street jargon and I make it real for you. I make it tangible for you to feel confident in order to start investing. Because most women, especially women, right? We don't invest because we don't know how to, okay? And so that's where I come in. So why did we bring everybody here today? We brought everybody here today because we want to raise money. This is not just a regular fundraiser, donate, help out a little starving kid in Haiti. No, this is not what we're here to do. We are here to provide a long-term solution. The reason why countries like Haiti, countries like Puerto Rico is part of the United States, but countries that are not as developed as Europe, as the United States, as Canada, the reasons why they suffer so much is a lack of resources, right? And so what's happening is whenever these devastations happen, people flood the countries. They flood them with donations, flood, free stuff, donate, and it only lasts about 5 minutes. Okay. After 5 minutes, after there's something else on the news, no one cares anymore, but the people still need help. Okay. So we're here to provide a long-term solution. All right. We're here to send boots on the ground to have people stimulate the local economy by purchasing some of these items on the Haitian soil. Because guess what, guys? The local farmers, the local vendors, they cannot compete with free. Yes, it's great to give the clothes off your back and donate it, but the people that are making clothes in Haiti or in that country, they can't compete with your free item. And so it's kind of a double-edged sword. Yes, you're giving the clothes off your back as something that you want to do good, but it actually can hurt people if it's not done correctly. So we are here to raise money. So get your Cash Apps, your Zales, get all that ready, okay? And we're going to donate, and I hope you guys find a lot of value. So we're going to go into questions. Jeremy Newsom says, question, Joel, how do you evaluate a company for long-term investing? I'm going to let you take it away, Joel.
I asked Jeremy. No, I'm joking. All right, there's two ways to evaluate a company. All right, and this is a really important. People should pay attention here. You can evaluate a company on their fundamentals, right? And their fundamentals are the information that is readily accessible. Their earnings report, their cash flow, their price to earnings ratio. There's a lot of numbers in there that, you can scrunch. You don't have to be a sophisticated of accountant. But if you look at the successful companies like Apple and Google and Facebook, they're increasing revenues, they're increasing their earnings, they're reinvesting the money that they make. So that's looking at the fundamentals of a company, the earnings. That's very important. Also, analyst ratings are not quite as important. Now, what people tend to overemphasize is technical analysis. And are you guys familiar with that term? Technical analysis, charting? Yep. So that's a way where, all of the fundamental information is processed every day on a daily basis. And that goes into the price action in a chart. And I tell you, you can get 10 different people to look at a chart, and they'll give you 10 different opinions. What's important about technical analysis is to kind of keep it simple. And, we talk about that a lot on our pre-market prep show. There's simple ways to do it. So if there's technical analysis or fundamental analysis, I think some of your institutional investors and bigger investors will kind of mix the two, where they like a fundamentals in the company, and then they'll drill down on the technicals and figure out a game plan, a long-term game plan, because it takes a long time for these big institutions and big traders to build positions. I think the most important thing for, I think, our audience here is just to get involved in the market. I don't, no matter how much money you're making, no matter what it is, no matter what your age is, like, get some skin in the game. And with the way the brokerage firms are set up now, and the way the ease to access in the markets, especially if you're younger, you're just getting started, you don't think you have any money, just $20, $40, $50, put that aside, perhaps, put it in something and watch it, get some skin in the game, and then you get a feeling. But that's the way I evaluate long-term stocks. And people have different opinions, but if anyone would like me to expound on that, I'd be glad to.
Yes, please do. Please do. Yes.
Well, I see a question: is a market crash on the horizon? That's coming from Claudine. Yes, I've been predicting that about for the last year and a half. So there's no way to predict those kind of things about a market crash. Those are anomalies. And if you spend your time investing or doing things worrying about those kind of events, then you're not going to be a successful long-term investor. There's always corrections. There's always things in the market, but you can't approach it from the mindset of when the next market crash is going to happen.
And I'd like to piggyback off of that, right? If you guys want to invest, just like Joel said, right? You want to start with 20, $50, just get started in the market. But if you're worried about a crash, that means you're using money you can't afford to lose, right? When you're investing, you don't want to worry about what's going to happen in the market. Actually, crashes can be very beneficial, because that's when you get the chance to buy solid stocks like Apple, like Microsoft, right? Like these solid stocks on sale, all right? These are trillion-dollar companies. It's going to take a lot. They're bigger than some countries. It's going to take a lot for them to go bankrupt. And so when you see a market crash, when I see a market crash, I get happy because everything's on sale. Well, all the good stuff is on sale, right? You don't want to just buy a stock that's $5 because it's $5, right? And so
I like to expound on something that you're saying there. And we deal with or we interact with traders, of investors of all different time horizons and time frames. And I think that people overemphasize, what's sexy. I mean, you hear about these meme stocks, GameStop or AMC. I mean, those are ways to get rich quick or get poor quick. And frankly, I do in my long-term portfolio. I have no stocks like that in my long-term portfolio. And the reason is because you can't control the risk. Or unless you're really good, you sit in front of your computer all day and you're able to do it. They're very difficult. And I think that's, whatever you want to say, traders or investors, I think people are attracted to really the difficult things where, boring is beautiful. And you can look at, different percentage returns. But if you're in there for every investment and every trade, you're going to make 60, 70%. Yeah, those things do happen. But for long-term investing, I mean, you just, unless you just have incredible timing, then it's very difficult to do.
Awesome. Thank you for that, Joel. I have a question for Juliana on on there. Jocelyn says, how do you manage your corporate brand and your side hustle brand? Thinking employer may feel I have one foot out the door.
As long as it doesn't compete, meaning it's not the same industry, you should be fine. Your employer should not be hunting you for that, because it is okay for you to still want to have a side hustle. Now, you kind of want to integrate the two and tell them, listen, this is what I'm doing. This is my growth aspect. And if someone wants to see you grow, they're going to be okay with it. Now, for example, let's say you're working in the corporate world and you're working in, let's say in the food and beverage industry, but you want to do pillows on the side, for example. It has nothing to do with each other, and that should be okay. So that's a separate conversation that you should be having with your boss, so that they understand that you want to grow as a person. So that's my 2 cents on that.
Thank you for that. Thank you. Thank you. I hope that answered your question, Jocelyn. Question for Isis, right? Isis, how would you integrate your spirituality into being a career professional? Because I work with a lot of different women who are career professionals, and they're always running around. They've got the kids, they've got the husband, they've got all of this stuff to take care of. How do you find time to center yourself and all of that jazz? Take it away.
Right. Yes. So first, it's actually a mindset. It's a mindset that you have to cultivate. Once you understand that, first of all, health is wealth. Health is the first type of wealth that is really on the bottom. It's the foundation. So if you don't have health, anything else you have is really, literally, it's worthless, even if you have money. So when you understand that you need to cultivate a mindset that, as a woman especially, that the people that you take care of, as a woman, I'm a mother of 4, and I'm also a nurse. So I'm used to, like you said, feeling like I have to do so much for everybody else. What about me? But once I understood that I am the best example for the people around me. So I wanted to be the best example for my children. I wanted to teach them that they need to take care of themselves first before they take care of anybody else. So I'm the type of person who would wake up at 5 o'clock in the morning, leave the kids, and go to and hit the gym and do that 1 hour gym workout, just so I can pay myself first. Because it's important to pay yourself first, because this is the body, this is the mind, this is the machine. I hate to call it a machine, it's not a machine, but this is the machine that's making everything happen. So if you don't take care of it first, if you don't put into it first, it's not going to be able to give you a great output anyway. And eventually you're going to run into trouble if you spend way too much time on worrying about other things, like you're not worrying about relationships. You're not making sure you have great relationships as a great foundation, your mental health, your physical health. So once you understand that, it's just a matter of cutting the 24 hours into what's priority. You'll be able to dice out, these are the priorities. These are the things I really have to focus on, which is my health, my mental health, making sure I get that exercise. Because when you're used to getting up at that time in the morning, getting that adrenaline running, and, eating the right foods, then at 3 o'clock, when the market is about to go down, you can probably look at a stock and you can make a very sound decision, because you're not sleepy. You didn't have too much sugar in your body. So you're actually pretty alert and pretty awake, and you can make a sound decision that can be very beneficial for you financially. But first of all, it's just basically prioritizing, and understand that you are first. You pay yourself first in every way, mentally, physically, financially, also you pay yourself first. So that would be my answer to that.
That was beautiful. Yes. And it's something that I say all the time. Pay yourself first. I always say this to my community. What is the number one bill you should always pay? Right? The bill, the most important bill. I usually get, your rent, your car. No, your rent is not as important as you. Because when you need help, sorry, was someone speaking? When you need help, right? The car is not going to help you. Well, I guess it can in some situations, but you guys get the point. Okay, right. All right. So we have Sharika here. She made it. There was some issues, clicking the wrong links. It's okay. She finally made it. She is actually a financial advisor. She is actually licensed. She used to work with, what was it, Merrill Lynch you used to work with, or Bank of America?
I did used to work with Merrill Lynch. I worked with Prudential first, then I worked for Merrill Lynch. Currently, I'm with Newbridge Securities, and I also do financial planning with my kind of on the side of finance with Sharika. But definitely what I do, I have a team of advisors that we work together. We deal with IPOs, well, initial public offerings, secondary offerings, private placements. But not only that, building a portfolio for retirement or meeting you where you are, and then understanding what the financial planning of that looks like, because everybody's financial plan is going to be different, because everybody's in a different set or a different space in life. So I invite anybody to ask me questions surrounding that, anything that you have, questions from where you are today for where you relative to where you'd like to be. That's what I'm here for. And I apologize for my tardiness. I've been here, congratulated the baby, everything. And I'm just like, but I can't see you guys. So, okay, I'm here. Thanks.
That's okay. Thank you for being here. We have Dennis. Dennis in the looks like Dennis is supposed to be on this side, right? So, but he's supposed to be here around 8:30. But Dennis has a question. What is your favorite company to invest in right now? So I'm gonna let you take it away, Joel.
Okay. Yeah, throwing me a curveball. I'm used to that. Well, first of all, I'm going to make a general comment and then I'll make a specific comment. It's very hard to beat the market. Okay. And what I mean by the market for long-term investing is, the index. I've been following, trading, investing in the S&P 500 for years. And, I don't have years where, 40, 50, 60%, 70%, maybe some individual stocks that I buy, I do, but it's very hard to beat the market. And so when I look at like investing, for the lot, and this has been the trend, it's not just been going on for like a few years. So it's very hard to beat the overall returns in the market. And I think people get distorted by things that they see in media and social media and the returns. But if you really look at it, in a long-term portfolio, if you're grinding out 5, 7, 10, 11% returns, and you can, you're not leveraged. So when the bad years come, you're not losing 15, 20%. That's the way you have to approach investing. If you had to say like one stock, which is really hard, I'm just going to go to the chalk, man. I'm going to go to the favorite, and Apple. I mean, it has the reason it has the ecosystem. Okay. It has people's phones. It has people on their iPads. It has an Apple TV. They have, they're coming out working in the car industry. When you have that many people that you have their attention and I'm not going to say data, I'm not going to go on that. That's an incredible moat. Now, Facebook was able to build that through a different way. But when you have access to that many people and you deliver that good a product with services, it's hard to beat. And on a relative basis, when people are, talk about PEs and price to earnings ratios, it's low. And the reason it's increased in price is because it's increased that multiple. But if that traded at a valuation, like I don't even want to like go there, but if it even traded at a valuation of something like Zoom or some of these other, which is still overvalued at the price it is, you're talking about exponential growth. So that it's old, it's boring, it's not the the sexy stock or that people want to hear, or it's not Bitcoin or Cardano or whatever other altcoin there is. But slow and steady wins the race in investing and trading. And you know what, I like to participate in the horse races and other kind of, and I always look at the long shot. But a lot of times in investing, you keep betting on the long shots. You may get one to come in, but you got a company that's making more money, they're increasing revenues, they're increasing their cash position. I mean, it's really it's hard to argue against it.
Beautiful. Thank you. Thank you. Sharika, would you like to answer that?
Absolutely. To piggyback a little bit off of what Joel said, definitely slow and steady wins the race. Really, and again, like this is where I say we have to meet you where you are. It really depends upon the type of investor that you are, right? If you're somebody that's not, you're not watching the market day to day, or you're not seeing everything day to day, and you're doing all this research because you have a regular life and you go to work, definitely slow and steady wins the race. So you want to invest in those companies that have had a history of winning, that are stable companies, your large cap companies, those companies that have been with winning, such as Apple. I really still like Amazon. I was really sad that they didn't beat their earnings, because I just don't understand, because I got 10 million boxes sitting at my door, and I know other people do during this pandemic, but hey, these things happen. But Amazon is still, maybe I'm just a little hopeful. Amazon is still one of my favorites, but definitely the larger companies, the Apples, your companies that have showed you, like I said, a history of doing well and that continue to do well. Those are the ones that you want to be investing in. Of course, to pick one and hope for a win, like he said, or those long-term plays, that really depends on the type of investor that you are and how much money you can have to put to that. So.
Awesome. Thank you for that. Joel, is 7:30. I know you have to go soon, so just let me know when you have to go, okay?
Yeah, if there's any more direct questions for me, I'm glad to answer them. If not, I'll keep it going. I'll turn my camera off, and I'll surely try and come back a little bit later. But do you have any? If there's no more direct questions, then I'll just sign off for a little bit, and hope to rejoin you later on. You guys are doing a great job giving great information to people.
Thank you. Thank you. I do have a question in the chat that me and Sharika could definitely answer.
Okay.
We'd love to hear what you have to say. Sandra Paulin says, what is the average percent return on long-term investments? I think she means, what should she be looking for? I think that's really what she meant to ask. So go ahead, if you can answer that for her, please.
I mean, I think the historical long-term, return of the S&P is probably somewhere between 5 and 10% if you account for, the down years in the markets. But, you can fact check me on that, but it's a pretty stable return. It's just, you have the years where there's negative returns, and there really hasn't been that many, I would say. And that's always what the goal that I shoot for in my long-term portfolios.
I do have one last question. One last question from me. I just want to see what you have to say to the audience.
Sure.
Why is it important? Because when you and I spoke on the phone today, you said you do futures, you do mostly long-term investment. You even said, hey, I'm an old guy. I do things, the old way. Okay. So why do you think it's so important to do long-term investments versus, being a day trader or trading, the Bitcoins or trading the AMCs and the Dogecoins and all of that? I'd love to hear what you have to say about that.
Because from that perspective, it's impossible to predict what's going to happen on a day-to-day basis. It's impossible to predict a pandemic. It's impossible to know what Apple's going to do in their next quarter. So unless you have the mindset to be able to take every day from a fresh perspective, and I think the most important thing, like if you really think you want to be a day trader and a short-term trader, then you better learn someday how to short the market, or someday learn how to play both sides of the market. And, just from my perspective of being on the floor, being, working in office with the traders, you got to keep an open mind. And with what's going on in this world right now on a daily basis, you can't wake up the next morning and have a crystal ball. You can't look at a chart. There's a million other people looking at a chart and doing the same thing. So, it's okay to have different portfolios. It's okay to have different time horizons and stuff. But, I can, what do I know what the jobs numbers are going to be tomorrow? You don't know if the jobs number is too good. That means Jerome Powell is going to raise interest rates. Well, raising interest rates is bad for the market. Okay, then if it's a weak job number, people will say, well, oh, that's good. Interest rates are going on. It's impossible to predict in that short of time frame on a day-to-day basis. So if you're in it for the long haul, you can focus out, you can get rid of all the noise and have a plan and not be affected. I mean, there's so much out there on a daily basis. There's so many people trying to influence you to do something in a stock. To me, it's a little bit disheartening, but it is what it is. So in order to keep your focus and to think that you can have a crystal ball to be able to do it on a daily basis, there's some people that do it and there's some people that do it well. But not only do you have to be capitalized, you have to have the right psychology and you have to be flexible. And for what I've learned from most traders, taking one side of the market, well, the bull side has worked for a long time. But there are times like March where a lot of people that have traded long side only got blown out of the market. So that's probably a long answer to a short question.
Oh, sorry, I was unmuted. Yes, I have one last question. I'm sorry, it just popped up. It's actually from my mom. Hi, Mom. All right. So
I always
Mom,
take mom questions.
right, you have to. You have to. So Mom says, a question for Joel. What is a good example of a diverse portfolio? Of course, she has to hear it from you, not me, right?
Oh, just a good concentration, not being so overweighted in one stock, 30, 40. I mean, that's what you see a lot of people do. I mean, probably, between the different index funds and individual stocks and ETFs that I own, I mean, they could, one, two, three of them could go to zero and it wouldn't be good and it would have a negative impact on my overall return. But if you have one investment in your portfolio, whether it's a day trading portfolio, an options portfolio, that you're worried about or you're thinking about and you're over concentrating in that, then you don't have an equal weighting. It's when you're able, you're going to hit your home runs. You're going to get some stocks that, have unbelievable returns. But if you have too much concentrated on one thing, then you better be right and you better be monitoring it. So a good diversified portfolio is where you have, I don't want to say less than 1.5, 2% of your assets in one thing. I mean, that's it all depends on what your asset is and your allocation, but don't get too big in one thing because it works great on the way up, but it doesn't work well on the way down.
And I would add on to that, just buy an index fund, right? Buy something with that's tied to the S&P 500, right? Or well, the Dow is a little volatile, but any fund like VOO, VTI, right? SPY, these they're invested into 500 different stocks. So that automatically diversifies your portfolio as well. So definitely add some index funds into your portfolio. I would add that. All right. Thank you,
Okay,
Joel.
I'm going to hop off. I'll be back. You guys are wonderful. You're doing a great job.
Thank you. Thank you so much. All right. Sorry, guys. I know he had to dominate the conversation only because he had to go, but we're going to involve everybody, I promise. Okay. All right. Awesome. Any more questions from the audience? I have questions, so I can take up all the questions. Okay. So please, this is what we're here for. This is a Q&A. Some of you guys may not know what to ask. You may think that your question is too obvious. Ask it anyway. All right. Because we're here to keep the conversation. You guys heard Joel. He's going to come back. So we got to keep the conversation going so we can have him back. All right. So Isis, I'm going to ask you this question. I wanted to talk a little bit about community, working as a community, because especially within the Haitian community, right? Can you talk about coming together to build wealth as a community and how that relates to spirituality and all of that?
Right. I'll give you a little story to actually illustrate the point that I'm trying to make. First, I want to say that I want to, am I here?
Yeah, you're still here. Yeah.
Oh, okay. You were gone. First of all, a couple of myths about spirituality and financial wealth. First of all, there's absolutely nothing wrong with being wealthy and at the same time being spiritual. a lot of people think there is, a lot of people think there is a problem. Like, you know, if I need to choose, do I need to be spiritual or do I need to be wealthy? No, money is an energy. Okay, the world runs on energy. Okay, spirituality is all about energy. So there's always been some sort of currency that we trade with. It wasn't always cash. As you notice now, it's about to be digital currency. So that can change from time to time, but money is part of life. It's part of the universe. It's an energy. So get right with that, first of all, in your mind. You know, the mindset should be that, you know, wealth, you owe it to yourself to be wealthy, like I said, in every level of wealth. First of all, I grew up in Haiti. I'm also Haitian, as you know. I grew up in Haiti, in Gonaive, in a small community. My grandmother had a restaurant. So I grew up in a restaurant since I was like 5 years old. So Haiti, I grew up, I saw a lot of abundance. Even it wasn't just money, but abundance flooded my consciousness. You know, I grew up in the restaurants. There were a lot of pots. When my grandmother's buying ingredients, it's always a whole lot because it's for a restaurant. So I grew up seeing a lot of things. When I go to, you know, to grab something, a tree for snacks, it's a big tree that has plenty of fruits. So my consciousness was flooded. I didn't realize that was what's happening with abundance. Abundance. There's always enough. There's everything. And my grandmother, being that she was a pillar in a community and she had a restaurant, she was a big part. It was a small community, but she was a big part. As you know, Haiti, everybody knows everybody and everybody do everything with everybody. And so I saw how, to give you an example, like she was trying to build a home and she didn't have all the money to build all the 3 stories of the home. So she started with one story. And the people that were coming to the restaurant to eat, some of them were masons, some of them were engineers, some of them were architects. And everybody pitched in, everybody who was coming to the restaurant, some of them pitched in their services, their talents to help her build that house. So eventually I saw how it took about 5 years for her to build the house, but it was a whole community project. But it was because her as a merchant, her as a community player, she gave a lot of herself into the community. She was part of the big community. She was one of those people when it was carnival time that would cook and give out food to the community and people knew her. So to me, relationship building is a big part of wealth and how you build wealth, because you're going to need, you know, network. You're going to need that because sometimes that's just not just money. Sometimes it's the services that you need, the talent, whatever you need. And sometimes that's even more than the money that you're looking for. So it's imperative, like you said in the beginning, that especially in a small community like Haiti, we have small, you know, our local merchants, they need the help. They the one who really needs the help so that they can get their business going, so that they can feel their products have value. And they also are valuable people in their community so that they can, you know, be part of their community. Because what we do is, like you said earlier, if we keep giving and giving just stuff that people are not part of, you know, making it, then it takes away from who they are as a person. It takes away from what they're able to give to their own community. And in respect, you kind of like take away from the human what they could have contributed to their community, to their family, in their livelihood.
Thank you so much for that. That was amazing. Yes, guys, there's a saying that someone said to me. I think it said, if you want to go fast, go alone. But if you want to go far, right, you need people. Right, you have to have a team to go far, right? So we have to do this as a community. And one of the things that Isis touched on was your network is your net worth. We put together this whole webinar. Some of us, this is the first time I've ever met Joel, right? And this is the first time he's ever met us, but we connected through Jeremy, right? Jeremy brought his network. Of course, you know, the circumstances happen. Hey, that's life, right? And then I brought in my network, and we're all here together, raising money for this cause together and learning and having a conversation together. You don't know where this might lead in your own life. Maybe one little message from Juliana or one little word that Sharika says may change the trajectory of your entire life. But none of that wouldn't have happened if it wasn't for networking, for coming together. Okay. Awesome. I love that, Isis. Thank you for that. Question for Juliana, right? I invited you to really talk to the entrepreneurs in the room and also the career professionals in the room. So it's easy to talk to an entrepreneur about marketing and branding, right? Because an entrepreneur knows, listen, when you've got a good product, it's time to market. So that's an easy conversation. But let's touch on the career professionals. I know Dosleen kind of opened the floor, but let's broaden the conversation about how a career professional can actually market themselves and brand themselves and their skills.
Absolutely. So I just dropped the PayPal link in there in case someone's having some challenges with that. It should be working. So when we talk about being an entrepreneur and when we talk about being someone who is in the corporate world, it is fundamentally important for you to showcase who you are. It is fundamentally important to tell your network what exactly you're doing, because if you are quiet and behind the scenes, no one's going to find you. Same thing goes with a business. If you are, let's say you are into financial advising and you are not showcasing who you are, no one's going to find you. They're going to go to your competitor. So what we're going to be talking about today is going to be about getting found online, having your own brand, and showcasing who you truly are. And a lot of it has to do with consistency and what people see you for, who you are, and that trust that builds within your own brand.
Got it. All right, awesome. I don't see, why is there crickets in the chat? I was expecting a whole lot of questions. There are crickets in the chat. Well, you know what, ladies, we're just gonna have a conversation between all of us, all right? And so get ready, grab some tea if you need to, or grab some water or something, because we're just gonna talk, you and I, because it looks like no one has questions.
Yeah. Just make sure that link is working. I checked the link is working. So let me know if you guys are having trouble with that, because we're the ones who set that up. So let me know.
Yes, it's working on my end. I just checked it. So Dennis, you want to check it again? Because it's working on our end. I hope it's working for you. Alrighty. Question for Sharika. Okay, I have a question. So what would be more beneficial for a career professional? When I say career professional, I'm talking about someone who literally, let me choose my words. Who has to go to work, right? Who has to go to work, and work takes up a lot of their time. That's what I mean to say. Where work is like, they don't have time for a side hustle, or they don't have time for this, right? What would be more beneficial for someone like that as far as investing?
The most beneficial thing first, before we get into like how it is that they would invest, is the budget, right? So oftentimes when we're caught up in work, we make a certain amount of money, definitely living within our means to an extent of knowing how much money we're saving. Everybody said it earlier, pay yourself first. You are the most important, because nobody out there is going to take care of you like you can take care of yourself. And you're not going to have a future if you're not saving any money. So the first thing is having a percentage that you commit to paying yourself first, having a percentage that you commit to for your lifestyle, for fun, because if we don't budget in fun, we're miserable, and you can't be miserable. And then once we get all those budgets and we get the budget that's correct, then you say, okay, now maybe I'm able to pay myself 25% annually. And now you want to take that and you want to budget that into how much of this is going to go into an investment, how much of this is going to go into savings, protection, all of that stuff. And the reason you want to do that is because you want to be able to be at a point where you can set it and forget it, and know that, God forbid, if something happens, you're going to be fine. There's always going to be money to pull from, and you don't have to tag something else onto your plate after you're already focused on working your day-to-day just to earn money. So that would be my biggest thing to share.
Awesome. Thank you for that. What about investing? So definitely pay yourself first, getting the fun account. I love that. Actually, that's something I tell my parents too, right? My clients, that's something I tell them, right? You need your Amazon. You need your Amazon. You need your happy hours with your girls. You need your coffee. You need all of that. You don't need to sacrifice. And that goes back to what Isis was talking about having a good relationship with abundance. There's this common misconception that we always have to sacrifice something in order, there's got to be an exchange of energy, but it doesn't need to be a painful sacrifice. It doesn't need to be something that, oh, I got to give my left rib to get this. It doesn't always have to be that. Sometimes, yes, but not always, right? So yes, budget and have some fun. Now, are you going to spend, $5,000 on Amazon and going out with your friends when, your rent is $5,000? No, right? You want to have that balance. But as far as investing, right, what would be a good strategy for someone who's super busy, has got the husband and the kids and the demanding boss and all of that? What would be a good strategy for them?
Well, first of all, it's figuring out what your actual risk tolerance is going to be into the market. What's your investment objective? That's where we start. What are your long-term goals? What are you trying to do? Once we figure out what your investment objective is, maybe you're at a point in your life where income is most important and you're looking for a portfolio that can generate more income. Maybe you're at a point where you just want maximum growth and income isn't what's important. That's where we got to start with first. Then when we figure out what your risk tolerance is, are you aggressive? Are you moderate? Are you conservative? We go from there. Now, you oftentimes you'll hear like, oh, based on your age, you should be investing this amount of percentage. Like, okay, so I'm 34, telling my age, right? So somebody would tell me on the basis, oh, roughly about 66% of your folio should be in stocks and bonds and the aggressive stuff, and the other 34% should, be your safe money. Honestly, I'm not going to say that that's trash, because it's not, because you can be you could be me and want to be way more aggressive, or you can be me and you can want to be way more conservative. So once we figure out our objectives, that's where we go from first. And then I would say utilize a financial advisor, right? And I tell people all the time too, any financial advisor is not what's going to work, right? Like, interview your financial advisors just like you would interview your realtors, just like you would interview anybody it is that you want to work with you. If you don't have that vibe, if you're not clicking, if you can't say to them, like, this is what I like, this is what I don't like, that's probably not your advisor. If you're ever in a room with someone and you're talking about your finances and they make you feel small, you should look to hire a new advisor. I should be able to meet you where you are and get you to the goal that you want, not steer you in another direction. But although not steer you in another direction, I should also be able to allow you to know about everything that there is out there. For me, what I do is I bring all the opportunities to my clients. And the reason I do that is because not everybody knows what's out there. You don't know that I'm IPOing a fund. You don't know that BlackRock is coming out with a new fund. It's for their innovation fund. You don't know about that. If I don't bring it to you, I can't learn. I can't just ask you, hey, what do you like, growth or income? Because you may not know about all your companies. You may not know about BlackRock, Naveen, or a Newberger fund. I can bring those to you. And as I bring you different opportunities, what I'm doing is chipping away at learning who you are as an investor, so that I am able to invest for you the way that you like. And then you got to figure out, do you want to be involved in it or not? Somebody who has kids, a husband, a career, and all that, you may want to have less worry about, I want to be able to say yay or nay if you sell something, and a managed portfolio might make sense. A combination makes sense too. Having a managed portfolio as well as a transactional portfolio is good, because there's certain things that that this money is good, but I still have a say so on XYZ, and you still have a say so on your managed portfolio. So it's really and truly figuring out, first off, your investment objective, secondly, your risk tolerance, and thirdly, hiring a professional or multiple professionals that are going to work on your behalf and get you to the goal that you want.
Sound familiar? I wonder where I've heard that before. Okay, awesome. I love it. So just to piggyback off of that, Frederic says, how does one find a reputable financial advisor? I've dealt with some that I don't mesh with. I think you kind of touched on that, if you want to answer that.
I would say ask around, ask your friends who they work with, ask the people that you admire who they work with. Definitely go, just like Juliana was saying, find those people who are putting themselves out there. Like, it's your job to seek out the professional. Like, we can't all just pop up in your face and say, hey, you need me. And honestly, would you really want me to? When you think about it, if I come at people and I'm just like, hey, talk to me, you need this, you're going to get annoyed and you're going to back up. you know? So we've got to meet you where you are. So definitely take your time, do your research. Who do you admire? Who do you see in your life that you're like, man, they seem they got it together. I wonder if they're working with a financial professional. Let me ask them if they'll refer me. Hey, I know this person. I see them on my social network. They're always talking about finances. I wonder if they can refer somebody to me or guide me in the right direction. But it should never be a one and done. I definitely understand working with people that you don't mesh with. I've worked with people that I don't mesh with. And guess what? We live in a life of free will. You don't have to mesh with those people. If you don't mesh with them, don't. Like, our spirituality, our spirit, our level, our highs, it's everything. Like, that's what's most important.
Love it, love it. The questions are coming in. There we go. Now we're talking. Okay. Okay, another question for you. Doslene says, what should be our expectation for a managed account?
Your expectation for a managed account should be, first of all, knowing that your financial professional has your best interests at heart and understands what your investment objective is, right? So if I have a managed portfolio and I know that I have clients that just want income, they don't care if they lose every dime, as long as their income isn't going to change, that's fine. And that means, like, you have stocks that you can invest in that are going to pay their dividends, that have been paying dividends. Their actual value may fluctuate and it could go down, but those clients are just like, but I'm getting income and that's all that matters. I have clients that having a balanced portfolio is what's most important. They don't want to lose money, but they also want an income portfolio where they know this is here no matter what, but I want that money to also make me money. So there are things that are out there that are non-correlated investments that you can put into and earn yourself an income that you don't even have to think about. And then you don't have to worry if my principal is going to fluctuate either. So the first thing is definitely knowing your objective, your investment objective for your managed portfolio. Second thing, of course, kind of piggybacking on what I said before, once your financial professional knows that, they can kind of work with you and guide you in the ways that we're going to invest. And you definitely want to make sure your financial professional knows you and has had a good enough conversation and know the things that you like. This is why I offer everything to my clients when I first start with them, because like I said, you may not know all the investments that are out there, and it allows me to chip away at what's going to be important or what are the things that you like more. So then I can now tailor your managed portfolio in the way that you like. Now, that's if you're working with specifically an advisor. Understand too how that advisor works. There are some advisors that'll build your portfolio from scratch. There are some advisors that'll say, hey, I got a team that works for me, and they'll just put you in like different BlackRock innovation funds, or they'll put you with the BlackRock actual investment advisor on their team that just manages portfolios on their behalf. You've got to see what you want. I personally like to know that my advisor knows more about the market than just kind of tells me the whole spiel of, hey, I've got people that do that for me. Give me your money, I'll give it to them. Because honestly, what happens a lot of times with that is your money fluctuates, and then they meet you maybe 1 to 2 times a year and they say, oh, we didn't do good this year, get better luck next year. You know, the market fluctuates. I want somebody who's more instrumental in my portfolio so that I can see, even at this moment, the market's been fluctuating, it's all over the place, we're not necessarily sure, are we going to go up, are we going to go down? You got Kramer saying one thing, Joe Powell saying another. So like, we don't really know what's going to happen. Nobody knows what's going to happen. And you want to make sure that somebody is the person that's working for you, can pay attention to that and can actually withdraw on your behalf rather than just letting you go through all the fluctuations of the market too.
All righty, we got someone
like
joining us. Sorry, we have someone who's joining us. I'm not sure. Can you introduce yourself?
I think my name says Joel, but I'm Dennis.
I had a feeling. I was like, I think that's Dennis.
I snuck in with Joel's. Oh,
he's on mute.
I unmute. Can you hear me now?
Yep.
Okay, so it says I'm Joel. I'm actually not Joel. I'm Dennis Dick. I snuck in with Joel's Zoom because I'm so organized that I actually lost my Zoom. So I'm hoping somebody here can help me with my organizational skills, because I've always lacked organizational skills. But just to introduce myself, I'm actually on the opposite end of the spectrum to some of our panelists here. I'm a day trader. So I've been doing this for 21 years. I'm short term, although I do try to run my own long-term investment account. And that can really be a challenge sometimes. So I think I've got some questions maybe for some of the panelists here. Maybe Sharika, you can help me with this, because I'm always so short term in my trading that I have trouble seeing the long-term picture in my investing. How do you balance trading and investing? I'm going to throw it to you, Sharika.
Well, balancing the trading and investing, I have plenty of clients that are day traders. I love my day trader clients because you guys do sometimes way more research than I do. A lot of times I'm going to focus on those long-term plans. So I'm focusing on the larger companies, and you'll bring something to me that I can also look at. But the biggest thing is having another professional. Also, what I find is day traders tend to have a lot of hesitancy of working with a financial advisor and having somebody manage their portfolio as far as for the long-term trading. And that hesitancy kind of is what kind of puts you in the position that you're in, right? Because you want to win, you want it now, you want to get in, you want to get out, and you want to be on to the next thing. And that's fantastic. But unfortunately, when you get to the long-term investing, when you're looking at the bigger companies, you're also seeing a gain there, and you're like, maybe I should take it. It's probably going to go down. So I would say separate it, right?
Yeah.
Definitely look for someone that's a financial professional that you jive with, that you mesh well with, that will take care of your long-term portfolio. And then you guys can still have a conversation. I talk to my day traders on a daily basis. They know exactly what's going on in their account. I know exactly what they're thinking about, what they're doing. And we piggyback ideas off of each other all the time. I love day traders are my favorite because you guys know, like you know exactly what I'm talking about. When I throw something at you, we can have a real conversation that other people may say that we're speaking a different language, but hey, I love it.
Love it. I love it. Thank you for that. Now the questions are flooding in. We're like backed up over here. I love it. This is what I wanted. So thank you guys. Okay. So Amalia asked the question. Amalia, I'm going to actually answer that towards the end. Okay. Cause I want to get through the panelists. Isis. Darlene says, in terms of spirituality, so we're going to shift it a little bit. We're going to start talking about spirituality a little bit here, okay? In terms of spirituality, how do you know if someone is a right fit spiritually when networking and dating? Okay.
Oh,
let's talk.
Okay, thanks for the question. Actually, this is a loaded question, but I'm going to try to give you the shorter version of the answer. First of all, you have to know yourself. It's all about yourself. Knowing yourself, who you are as a person, how confident you are in yourself. And I'm not talking about, confident in terms of, do I look good or not? No, just, who you are. Do you know yourself? So are you working on yourself? That means if you're the type of person, as we were talking about before, you take care of yourself, you into yourself, you support yourself, you have these, relationships, in place, you got your family in place, you got your friends in place, you got all of that going on for you, and you're giving and taking in all these relationships. You will know yourself when you meet someone. You will have the cues on how you relate to that person based on how everything, turns out in terms of how everything lines up. If you into, finances and you like to, you want to be wealthy, for example. And like I said, if you're wealthy already and you said, well, I want to date somebody who's just as wealthy as me, or I want to date somebody, I don't care about their financial portfolio. Now that's a decision you're going to have to make. You're going to have to be comfortable with yourself on why you're making these decisions. It's not because, it's written somewhere. It's because you know yourself and what you can handle and what is it that you want. And that's what's going to give you the answer to when you meet this person, that you can relate to them in other levels, that you say, well, that's not important. I really don't care if he has money or not, or I do care that he has money. So then you will find, when you meet the person, then you will know, oh, well, this is not going to work because he's like, a 9-to-5 job. And, I'm looking for somebody who's wealthy. And you have every right to have that, to want that. It's just that you have to know why you want, who you are and why you want it. So that when you do find that, you can walk into that, you can meet this person, and then you'll be able to find out, is this the right fit for you? Not just on these other bigger areas, but smaller scales, who is this person, what are they as family, other things, but at least, the big parts. Usually people make mistakes because they don't know themselves. They don't know what they want. They're not comfortable with what they want. They haven't actually researched it, understand it for themselves. So they really wrestling with it in their mind. So the work is really on you, for you to know who you are. And you only get to know who you are by actually being with you a whole lot, spending time with yourself, asking yourself questions. Why do I want this? Why do I not want this? Getting into you. And that's what spirituality is all about. You getting to know you in a space that is comfortable for you, where you can hear voices, you can hear yourself, you can understand yourself.
Oh, I love that. That gave me chills. Yes, absolutely. And to piggyback off of that, right? You want to have that same mentality with your investments, right? I think everybody in this room, especially the investors in the group, we always start with, what is it that you want?
Right.
What do you want? Right?
Right.
From the notebook, what do you want? Right?
Right.
Figure out what it is that you want. What do you want your portfolio to do for you? Do you want to
Right.
make money every day, like Dennis, right? Who's a day trader? Do you want a slow grind, slow and steady wins the race, like Joel, right? Or do you want to do a little bit of both, like Sharika does, right? So you want to determine, what is it that I want to take care of, and then quantify it. Right. It's one thing to say, I want my children to be good, or I want my retirement to be good. Well, what does that look like? Right? What exactly does look like, and how much does it cost? How much does it cost to put your child through college? Do you want your child to be able to go to Harvard? Because Harvard is $50K a year, right? Or is it a semester? I don't even remember. I think it's $50K a year, right? And so if you want your child to be able to go to Harvard, so you need to have $50K every year to be able to put them to Harvard. So get to work. So your little Coca-Cola that's got an 8% return that barely moves, or AT&T that barely moves, it's not going to get you there, right? You need something fast growth. So determine what it is that you want in your portfolio, and then that'll determine all the strategies that'll get you there. Thank you, Isis, for that.
And I'd like to add, just like for the finance. Oh, she's not hearing me. Can you hear me?
No, we can hear you. You're good. You're here. Yeah, you're
add to say, just like Sharika, if you go to a financial advisor, she has all the answers on if you know what you want. But if you don't know what you want, she can't come up with that for you. She can't come up with that. What is it that you want? You have to know what you want. Then she can go on and show you an array of choices on what you can do in order to get that result. But you have to know what you want.
Beautiful. The questions are flooding in. All right. I called you guys out and you guys showed up. I need to call you guys out more often. Okay. All right. So mom says, for Juliana, what is the best way platform to market yourself and rally people to your cause when you represent a nonprofit organization? All right.
All right, Mom, how's it going? It's a pleasure to meet you. My gosh, we did so much for you. I'm so happy to be here. So it really depends, okay? So when it comes to marketing and marketing tactics, we always, at Cox Marketing Agency, we look at your foundation. Okay, without a proper foundation, without proper branding, you are not going to get eyes on you and not have that trust for people to actually donate to you. There's a million people, I get spam calls all day long. So people want to trust that you are actually providing these services and good things that you're promising for the people who donate to your nonprofit organization. So how does that happen? What is the very, very first thing that you need? You need to look at your foundation. So when you think about pillars, you have to have a concrete one. And in order to do that, you need to have kind of like a blueprint. You need to have a strategy as to how you want to get there. And you would work with us to do that, of course. And the way that happens, number one, is your website. Your website is always going to be like your baby, is always going to be the place where people are going to focus on. People, when you have a nonprofit organization or when you have a business, people are always going to say like, oh yeah, give me your business card, or what is your website, right? So the other thing with that, if you have a website, then people are going to start asking you about your social media platforms, okay? And they're going to start what we call creeping you, and they're going to start understanding that they're actually looking at you as a nonprofit organization. And how do we tie all of that in together? Meaning your website, how you show up on LinkedIn, how you show up on Instagram, how you show up on Facebook. How do you link all that together is through your branding. So that includes your logo, how you look like, and the message that you have behind it. And being consistent on these different platforms is vitally important for people to see that you are there, that you are acting, that you are advocating for these families, for these children, and that the money that they are investing is actually going somewhere. So I know what you do because we did a lot of research on you. You do a lot of great things. You do a lot of charitable events. You do painting. You do cooking. You bring all these supplies to Haiti. So I know that. But the thing is, the people that are looking at you on your social media platforms, they don't know that yet. So in order to be completely open out there, you need to post, you need to engage, and it all has to be consistent upon these different platforms. So in order to rally people to continue to donate to you, the very, very first thing that we have to do is we need to start posting, and we need to be consistent. You need to have videos, you need to have images. People want to see that. And in order to scale, okay, because some people tell me, hey, let's do ads, let's do Facebook ads right away. Wait. We're not ready for Facebook ads yet. What we're ready to do is start building your organic reach. Who are the people that you're already talking to? Who are the people that are already donating to you? How are you giving back to them? How are you showing them that, their $200 or $500 is going a long way? Like what books, what supplies, what meals, what travel expenses did this cover for your nonprofit organization? Because people really, really have that emotional tendency and they want to give back. A lot of people are in a stage that they want to be philanthropists and they want to help your organization because they do care about what's happening in different parts of the countries. We are here in the United States. We're sometimes oblivious. We don't know how much help, these third world countries truly, truly needs. And we have done work with other nonprofit organizations. And the number one way to start is number one, through branding, posting consistently, and email marketing, showcasing that you are communicating with them, that you are there, you are live, you're posting them different updates, and that really encourages reoccurring donations. And
That's great.
reoccurring
Hey,
donations.
Can I hop in? Am I allowed to come back?
Yeah, Joel,
Yeah,
come
you
on.
can come back, but let's her finish. Let's let her finish first. Thank you, Joel.
Okay.
So with all those reoccurring donations, you're able to sustain the community in Haiti, and you're able to sustain what you're able to offer. Not just, okay, we just got school supplies for the beginning of the year, but you want to, feed them when it comes to Thanksgiving. You want to feed them, when it comes to Christmas and New Year's. You don't want to be like that one off. You want to be someone that's advocating for them consistently. And I know you've been doing this for many, many years. And what Katiana, Joel, Jeremy, and all the other panelists are doing here is quite incredible. And I know for a fact all these donations are going to go to a very, very good place, because I have seen and read and know about your message, and that is fundamentally important. But overall, for any nonprofit organization, you might not have the assets to start doing Facebook ads, and you might not be ready for it yet. So what we call is scaling. So you first work on your foundations, you work on your website, you work on your branding, you work on your messaging, your social media posts, so people can start building that trust with you. And then once you plateau, in other words, so once you plateau with donations, or if you're a business, once you plateau in revenue, then we look at scaling. Then we scale your business, and that's how you begin to grow your nonprofit or your business. So, and then there's one more category on top of that, but that is essentially what it is. So that's my 2 cents when it comes to advocating for your nonprofit organization, is always building up on your foundation.
Thank you for that. And that can be used for any business, really, not just nonprofit. Beautiful. Go ahead, Joel. You had something to add?
Well, no, there was a question here for Triple D. Have you introduced Dennis yet?
Yes, I have.
Okay.
They did introduce me there. We've just been going on some other stuff for a bit here. So we'll get.
Well,
we'll
there's
get to the
one
investing
question
questions.
I want to interview you. I'm going to ask one question and then I'm going to go.
Oh,
Okay.
Joel just wanted to pop in and ask a question.
Well, he asked a tough question on me, right? He popped in and asked what the best stock
Right.
to buy. So what is the best way to spot institutional buying, selling in a stock? Okay. In the price action, size of orders, are they always hidden orders, etc.?
This was from Fabian actually in the chat. So Joel's trying to take the good question and pretend it's his, but it's really from one of our followers there who
was trying to
obviously
see
knows
if
how to
I
write
saw
a
him
very
read.
good question. He hijacked that question. Yeah, so there's a number of ways. So and we're obviously getting into trading tactics here to a certain extent with this question. The number one way you can spot institutional selling is actually it's in the SEC filings. So if you want to, you can go to the Edgar filings. You can actually get it, through Benzinga Pro. A lot of our listeners use the Benzinga Pro, but they will show you institutional filings. Like if it's a big buyer, a big seller, those show up in the SEC filings. They usually take a couple of days, so you're not getting on the spot. Now, if you're in the open market and you're trying to spot and say, I think there's a big buyer in here and it might really push the stock. How do you recognize that? You can look, at the tape where you see bigger orders, but sometimes what you see is hidden orders, which is what the question was regarding too. They're called iceberg orders. So you'll see in the bid, on the bid and on the offer. I know we're getting a little bit technical here and we'll try to keep it simple, but an iceberg order just shows the tip of the iceberg. And what that means is somebody might have a big order there to buy like 100,000 shares, but they're only showing it as 100 shares. So then you hit it and it's there and it's still not moving. It's not moving. It's not moving. So you see this 100 share order that keeps getting hit. Somebody's selling it to it, selling to it, selling to it. It's not moving. It's telling you that that's a pretty big fish. Now, this big fish might know something. This big fish might know nothing. They might just be, just wanting to own the stock for the long term. We don't know that, but we do know that big institutional money does move price. So by recognizing, when there's an institutional buyer, a big, in the markets, that can give you an edge. So we do try to track that information. And just going right back to the SEC filings, if you see like an SEC filing where Warren Buffett bought a stock, that stock will go up immediately on that information. So, because people follow that and obviously think Warren Buffett knows how to invest. So I don't know if you want to add anything to that, Sharika, as well. I know I see you nodding in the background on obviously the trading aspect of it, but you're on the other end of the spectrum. You are sometimes maybe, some of your clients might be these big institutional buyers we're looking for.
You hit it right on the head. That's exactly what it is. There's oftentimes we'll put in orders and we want it to show where it's not as big of an order that it actually is for that reason, because we don't want to spark any crazy like market activity, but the fact that you're able to pick up on that's fantastic. But you hit it spot on. And even on the other spectrum, sometimes, like you said, it may not even be anybody that's all that big. I have some clients that have invested in penny stocks all their life. Their penny stocks are worth tons of money now, but the liquidity in order for them to get out of their stock is not there. So you'll see big orders there that we're also trying to chip away so that we can try to get them out of that the same way. And that's not even on an institutional level. That's just trying to liquidate them, but they just happen to have a lot. So I think you hit it spot on.
Yeah, I think if you go back to 20 years ago, there was maybe less algorithmic traders and institutions and big traders could show their orders and there was big orders everywhere. And now everything is small, it's chopped up into little pieces. So, because nobody wants to, show their hand, I want to buy a whole bunch of stock, and then algorithmic traders will come in and push the price away from them. Exactly. So, if you're a little guy, you do have an advantage in the markets because you can get in and out fairly easily. If you're a big institutional buyer, sometimes it could take you all day, it could take you even days to buy the stock. So if you're showing your big hand that I want to buy this stock, the price could move away from you and you might not get the shares that you want at the price you want. So they're very careful to, hold the cards very, close and not show their hand.
I just want to make one comment and then I'm going to say goodnight and hope everyone makes a good donation. Is that, talking a lot of technical terms, but if you look at like daily charts or weekly charts, in order to spot this kind of price action, you cannot be looking at short-term charts. You have to look at longer-term charts and you'll see stocks accumulation, distribution, uh, and look at it. And it happens, it turns in the markets, both buying and selling. So it's not something you can just do by looking at the markets every day on your phone or something. But at least if you look at the daily, weekly, or monthly charts, you'll get a pretty good indication of what we're talking about. But great event, Dennis. I'm glad you could join. I'm going to call it a night. Thank you. It was
Thanks-
great. I hope
thanks for
everyone
coming,
donates.
Joel.
For coming. Thank you. Appreciate it. Dennis, I wanted to ask you what time frames do you look at when you're day trading?
So all time frames to a certain extent, but I actually, it's fairly simple. I've got simplified process. After 21 years, you kind of figure out what doesn't work and you try to keep, weeding that out. And you don't want to get so short term that just looking at little charts and individual movements. You can get caught up in the noise. The first thing, if I'm looking at a stock, I kind of look at the 90-day chart. What has it done for the last 90 days? Is this stock strong or is it weak? Because if you're looking at, a 90-day chart, it'll immediately give you a picture of that this stock has been getting sold over the last 90 days, or this stock has been getting bought. I tend to buy stocks that are showing strength, and I tend to sell stocks that are showing weakness, just saying that the momentum actually can continue. So you would say I'm a momentum trader in that way. So naturally, when I see a stock going straight down, it's natural human tendency to want to buy that stock, to think it's going to come back. But it's difficult when you have a stock going straight down. It's difficult because you have a lot of people who are now caught. And it's, you go back to behavioral finance where people don't like to sell at a loss. So if you bought the stock at 25, it's now 24. You're hoping it comes back to 25 to get your money back. But there's all these people that if a stock's been going down, you have a lot of people who are in the pain trade, where if it comes back a little bit, there's natural sellers that want to get their money back, as opposed to if a stock's going up. And most people don't short stocks. Most people are long only investors. There's no pain ahead. If you have a stock that's making a new all-time high, those stocks can easily go higher for the simple reason is that there's no natural seller that says, oh, give me my money back, because they're actually all making money. So it's a little bit contrary in thought, because you think buy low, sell high. But actually in this type of market, it's worked very well to buy high and sell higher. So naturally, I kind of look to actually what's showing strength as opposed to what's showing weakness.
And that's not to confuse the audience who are long-term investors. You're still buying low, sell high for long-term.
And I mean that's it too. There's two, and like I said to Sharika, you got to balance it. So if you see one of those good companies like an Apple that's on sale, and maybe it has been going down for the last 90 days, maybe it's going to be an opportunity for you for the next 10 years. Again, I'm looking, maybe only for the next few minutes, few hours, few days. But if you're looking, at good, and taking right back to the long-term investing, if you're looking at long-term investments, you've got to be analyzing, the fundamentals to a certain extent. You've got to understand what you're buying, because just, because the stock's been going straight up, doesn't necessarily mean, it's going to continue to do that. And long-term investing, I always say, in the long run, fundamentals do matter. In the short run, they might not, but in the long run, they absolutely do. And if you're paying, ridiculously high prices for stocks, you could get caught up in, what we had in the year 2000. Which we had this huge tech bubble where you had companies like, Walmart that were trading for 50 times earnings. It was unsustainable. So now Walmart trades at a reasonable, 20 or 21 times earning. It might even be less than that. But I mean, Walmart's profits continued to rise over the next 10 years, but the stock went nowhere for the simple reason is that investors were just paying too much back in 2000 for those future earnings. So even though the company did very well, the stock did very poorly because it had inflated too much too quickly. So as a long-term investor, you've got to be careful chasing stocks. So as a trader, I don't mind chasing stocks. As a long-term investor, you've got to be skeptical and you've got to understand what you're buying. You just don't want to pay. I look to market cap. You look, is it reasonably priced? Is the stock, has it just gone too far? Because, it's the FOMO, right, too, the fear of missing out. People naturally want to come in and they want to buy, what's making money. But you've got to sometimes, obviously look at it, from FOMO, and you want to be careful that you're not getting caught up in the FOMO itself, where, you're chasing, and all of a sudden, the trade turns and it starts to head the other way. So as a trader, you protect your wealth. As an investor, you probably do buy dips as an investor.
And you protect your wealth.
And you try to protect your wealth as best you can. Yeah. I mean, we're all trying to protect our wealth all the time. Sometimes, I do a good job at it. Sometimes I don't, it's all discipline, but trading and investing are two very different animals.
Two very different. Okay. So I have a general question. Anybody can take a crack at it. I think Isis can even take a crack at it on the spiritual side. Amalia asked, how do we know that we're ready to start investing in the stock market? I have an answer, but I want to hear everybody else, because y'all not here for me. You're here for everybody else.
And who's going? Who's going? Oh, you want me to go first? Mm-hmm. How do you know when it's time to start investing? Well, spiritually, again, you should ask yourself, well, why are you not investing? Why is there a reason? Are you blocked somewhere? Thinking about wealth is something that is outside of spirituality when it's actually not. Abundance, like I said, is in everything. Abundance of health, wealth, in financial, as well as all the other types of wealth. So it is important that you start investing if you have long-term goals. Sometimes you have long-term goals that is going to require that you are financially sound in order for you to meet those goals. Whether they are dreams that you have, whether it's like you want to go back home, and if you're from another country like I am, maybe I want to go back to Haiti and have a nonprofit organization for the little girls or something like that. Or maybe I want to spend my time. Maybe I want my time back. Maybe I want to have time. And investing is going to give me some time for me to do some of the things that I think are closer to my heart. Maybe something that's going to touch me dearly to what what I really want to do, what I think I'm here to do. And so I don't want money to be an obstacle to that. So investing might get you to your goal a lot faster if you invest and you can have your hands on some financial and some money so that you can actually meet your spiritual goal, which is I want to be in Haiti. I want to be doing more for the community. I want to be with little girls and show them when I was a little girl what somebody did for me. And if I can invest in the stock market and get some money, then I can do that maybe at 50 or at 60 versus 70 or 75. So you always have to think in terms of money as freedom, what it allows you to do with your time. You really want your time more than money, really. It's really your time that you're looking for. Because once you have the money, what do you do with it? Well, you have your time back. Now you can do whatever you want to do in your life. What will give you pleasure? What will, make your heart sing? What will fill you up spiritually too, which is being part of your community, maybe for you, or it could be something else for you. But you want to have that option. And investing can certainly put you there.
Thank you for that. That was beautiful. Dennis, you want to take a crack at it? How do you know that in your case, how do you know you're ready for day trading? I think that would be a better question for you.
Actually, the question might be better. How do I know if I'm ready for investing? I still don't know if I'm ready for investing. I know I'm a pretty good trader. I don't know. The jury's still out on whether I'm a good investor or not. So like I said, I confuse my trading and investing way too much. And the balancing act I have there is challenging at times. So but if you're just getting in, I think Joel hit on this a little bit earlier when he was talking about 30 minutes ago. You're just getting into investing. I think, just getting your feet wet, like there's so many places. Like if you were starting 25 years ago and you want to open a brokerage account, it wasn't that easy, 30 years ago, it wasn't that easy, but now it's fairly easy, and maybe you should start with the investment advisor route, and that's a good alternative for you too. But if you want to try, a little bit of the short-term trading aspect of it, or even, you want to try a little bit for yourself, there's lots of, different places you can go, like Robinhood, to open an account and you can trade for free. So I think just getting your feet wet, whether it be through an investment advisor, or whether it be through a trading account, just touching into it and then seeing if it's right for you. And if you're having, if you buy your first stock and you're having, I just can't handle this, you need an investment advisor. If you're, if that's when, it's like, I just can't, I want to sell right away, I buy, but maybe there's going to be, those people that also come in and be like, no, I think, even though I'm losing here or losing there, I'm learning. And, there's a different aspect to it all. And I mean, it's not like it's not easy to be a trader. I don't want to say, oh, everybody can just start and be a trader here. I think a lot more traders fail than succeed. But I think if you go at it just, from an investing standpoint, where you want to invest a little bit, you want to buy a small position in like an Apple or Microsoft or, some different blue chip stocks. I think just getting your feet wet and understanding, and getting a feel for having real skin in the game where you've got, even if you're only putting $100 or a couple $100 in there, watching it move up and down gives you a feel for it. And I think, and obviously if you can sleep well at night, then maybe you're ready to, maybe you're ready to invest then full time or look into getting into it more.
Sorry, I'm muted. Anyone else want to add anything?
I do want to add to that, for sure. When you know that you're ready to start investing, one, the fact that you're thinking about it is a sign that you're ready to start investing. That's number one. And number two, when you're financially stable enough, right? And when I say enough for a reason, because I don't want people to think that you shouldn't start investing until you have an abundance of cash and you don't have any debt, because what we really should be doing is managing our debt rather than putting all of our money towards our debt. Because the same way you go out and you work for your money, you want your dollars to be your employees for you. They should be working for you on your behalf. So at the point that you think, okay, should I be investing? You're probably ready to start. And secondly, it's, do I need money to live, or do I have a little bit of extra to play with? And if it's the latter and you have a little bit of extra to play with, I would definitely start. And depending upon where you are, it can be with an investment advisor, or it can be through, the trading accounts, your Robinhoods and such. TD Ameritrade has an amazing teaching platform. So these are routes that you can go through and learn. And Katiana has an amazing platform. I mean, being able to invest with a group of people and being able to learn about different stocks and learn about different strategies, that's when you know you're ready. And if you're willing to put that time in to learn, I say go for it. I'd rather my money working for me than just sitting on it and not letting it do anything.
Beautiful. Juliana, you want to add in something really quick?
Yes, absolutely. So when as a marketer, the way that I look at investing is hiring someone who actually knows what they're talking about when it comes to either your business, meaning doing marketing, or hiring one of you guys, right? So there's always an aspect of investing within yourself, meaning either educating, like paying for courses, educating yourself through getting in touch with that true professional, because sometimes DIYing it is going to cause you to go through a spiral of FOMO, meaning fear of missing out, and you don't know what strategies are going to work for you as the either employer or the business owner. So investing for me as a marketer looks a little bit similar to what you guys are talking about, but it also has that holistic vision that you need to invest in either a course or either in a coach so they can teach you and personalize the strategy for you. Hence why you will talk to Katiana, hence why you will talk to Sharika, to Dennis, to Joel, and Isis when it comes to, like whatever it is, whatever path that you want in your life. So that's my 2 cents when it comes to investing.
Thank you for that. Thank you. Yeah. And just like Sharika said, if you're thinking about investing, you are ready. So the reason why you haven't pulled the trigger, for the lack of a better term, the reason why you haven't downloaded your Roth IRA or your regular brokerage or your traditional IRA, or even educated yourself is because you're intimidated. Okay, you feel like this is a whole new world. You weren't taught any of this in school. Your parents probably didn't teach any of this to you, right? And you see all these guys on YouTube, on CNN, and they're talking all this jargon, and they're like the S&P and the Dow Jones and this and that, and you have no idea what any of that means. And you're like, I know I'm supposed to be doing this, but this is so overwhelming that I'm just gonna pause it. I'm just gonna put this here and I'll look at it later, right? And so what is the best way to do that? That goes back with what Juliana was saying. Invest in yourself, invest in some sort of coaching, invest in some sort of educational platform, right? Or invest in hours and hours of YouTube, right? Just so that you feel confident, because your knowledge is what's going to give you that confidence to click buy, right? And I'd like to ask you, Dennis, you've been a day trader for 20 something years. Can you talk about the types of investments that you have made in your education to be able to get to where you are now?
I mean, well, I went to university. I did my charter CFA through CFA Institute just to understand investments and trading and everything a little bit more. But I mean, I'm constantly investing in myself. I'm reading and researching and trying to learn from other traders. I mean, social media has given us so many different possible connections to learn from. And I think that's the biggest benefit, like on Twitter is, and I do the pre-market prep show for Benzinga, and I learned so much from her chat. We have so many good traders in there, and they bring trading ideas, but they bring strategies too. And it's like, oh, I didn't think of it this way. And somebody asks you a question in a different way, and then you're like, you think about it, it's like, oh, you think about that in a whole different aspect, because there's a buyer and a seller. So whenever you have a trade that comes together, somebody has the exact opposite opinion than you. So I mean, learning, what's on the opposite side of you, what are they seeing that I'm not seeing, might allow you to maybe get a better feel for it, whether you're making the right trade or making the right investment or not. So I think it's just social media has just connected traders in a way that they've never been connected before. You talk about the AMC, and they've got this whole movement that they're calling the apes, and they're trying to move this they're moving the AMC stock that everybody's probably heard about to the moon movement. But it's amazing that traders can come together to take over a stock, really. And that's really what they did, which was something that wouldn't have even been possible to exist before social media. So you've got to respect the other people's opinions out there, but just learning from all these other traders that there's so much to learn from everyone. I think that's the biggest benefit, is just reading and learning from other traders in the communities is how I continue to educate myself.
Love it, love it. You have a question in the group from my twin, Katiana, right? Another Katiana. She says, Dennis, you mentioned more traders fail than succeed. What would you say are some successful qualities that day traders possess?
It's actually going to be counterintuitive, but the most successful traders, and I've been with Bright Trading, which is a professional day trading company for my entire 21-year career. And, I traded in the Detroit office for about 15 years. So we saw a lot of traders come and go. You can identify it very quickly. It's actually, believe it or not, the risk adverse traders that succeed. It's naturally counterintuitive. You think, oh, like the gambler, the day trader, the gambler. And when, somebody's looking at you from the outside industry, they always see me as a gambler. I hate the casino. I don't buy any lottery tickets. I'm more just making, quantitative approach to the markets and making, bets and protecting my capital as much as I possibly can. So number one thing that makes a successful trader is discipline, the ability to admit when they are wrong. Because if you're not willing to take a loss, and we see this again and again, eventually you're going to get in a position that you were really wrong on and could continue to go down for a long time. And the number one thing I always say is don't add to the losers either. People want to naturally add to their losers. They want the price, because if you bought at 20 and now it goes to 10, well, if you add to it, now your average cost base is 15. They're trying to bring the cost basis down so they can possibly get back to even. But what happens is you're putting more and more hardworking capital into this one position. And if you get stuck in the one that isn't going to come back, it can really do some damage to your portfolio. So having the ability to admit you're wrong and admit you're wrong quickly will keep you in the game and allow you to be successful in this industry.
Love it, love it, love it. This is a question for, I think, either Sharika or myself or Dennis can answer. Cynthia Eugene says, what is your professional opinion on pre-IPO investments? Actually, Sharika could probably take this one. What is your professional opinion on pre-IPO investment?
Well, I mean, it really depends upon the investor that you are. Pre-IPO investments, private placements, and I got to say private placements because pre-IPO means that we know that they're going to IPO, but not every single time you do know. So it's about liquidity, right? I don't have anybody investing in pre-IPOs unless they're an accredited investor. And there's a certain amount of percentage that we're going to allow them to invest within that. But you got to understand that there's illiquidity in that investment. If I decide that I'm going to get into a private placement, example, like we did Impossible Foods, we did Eat Just, which is your Just Egg kind of thing that you see like at your Whole Foods and your Publix, which is the plant-based egg. We also did Palantir. We did Palantir before it actually went public. Luckily, when we got into Palantir before it went public, it was considered a pre-IPO. We got in at the time where, you know, we knew they had already filed to go public. So we knew they were going public. But there's Impossible Foods, we have an idea that they're going public, but we haven't heard news on that yet. So for somebody who's going to get into any type of pre-IPO or private placement, you've got to know that there's illiquidity in that investment. Can I put this money aside and can I never see it go public? And if it goes public, is that going to be a great thing too, right? Because you can get bad news during that time. Now let's say like with Palantir, right? Got in at Palantir at a great price. They went live. It goes up as a investor. When you invest before a stock goes public, you may have a restriction and you can't sell your stock for 6 months, and God knows what's going to happen with the market in between that time. You may win depending upon the time that you got in. I mean, Palantir, we got in at 650. There was a time that it was at 45, but our investors were still restricted and couldn't sell. By the time that they were unrestricted, it was back trading around like the 20 somethings. So all of these are things to consider when you're thinking about pre-IPOs, IPOs, private placements, whichever. It's possible that you can get into a company that never goes public, and you got to be ready for that and know that your money is just going to be with that company.
Anything that's not long-term investment is in a way risky, right? I'm not here to bust your bubble, Dennis, because I do trade. I do more swing trading than anything, not so much day trading as much. But with short-term investing, your skills got to be up there. Dennis has been in the game for 20 years and he still is learning from other traders. So this is something you have to take seriously. Anything else, if you're not doing long-term investing, it's a risk. It's a big risk. So thank you for that.
I do just want to say, like, from what Dennis was saying, I think that's very important, because he said, like, you see what people are posting on Twitter, and people have different strategies or different ideas that you hadn't even thought of. I've got some investors, some clients that are day traders just like Dennis is, and like I can bring an IPO and I'm getting a feel, they don't even know it, but I'm getting a feel of that IPO that I'm able to bring them based upon their response to it, because we do different types of research. As a financial advisor, as an investment advisor, I'm doing research more on the broader scale. I want to see the long-term investments. I want to see what the potential is going to be for the company, while he's doing it more so on a short-term scale. So we meet in the middle. So sometimes I can say, hey, I got such and such going live. What do you think about it? And he might say, hey, let me give you a call back. And if he calls me back and he says, I want some, I might say, hey, then this is probably a good one. So we have to utilize one another. Definitely. I love the idea of utilizing one another, whether it's on Twitter, somebody in your investment groups, whichever.
Got it. I saw someone in the comments. I just saw this. This was posted almost 30 minutes ago by Fabienne. She says she's confused about the webinar. Okay. So I know a lot of you guys weren't on in the beginning, but this is a holistic conversation on wealth building. Okay. And that's why we have a marketing expert over here to talk about your business, because a lot of you guys come to me and a lot of other financial advisors, and you have this conception that your investments are going to be your save all be all. Like that's going to solve all the problems that you have, all of the financial goals that you have. This portfolio is going to be it. All right. And that's why I have Isis here to bring in that spiritual conversation. Money is energy. Right? Dennis is just exchanging energy all day long, every day. He's putting in the energy of educating himself. He's giving his skill, his portfolio, that respect. And guess what? His portfolio gives him back that same respect. And that's why he's been in the game for 20 years. So when we're talking about wealth building, we need to have a holistic conversation. It's not, hey, what stocks do I buy? Hey, what chart do I read? Or, what indicators should I have on there? That's not going to solve all your problems, right? Having multiple streams of revenue, having a business, right, that Juliana can help market to bring in that cash flow so you can feed your long-term investments or even beef up your short-term investments, right? Having that spiritual alignment, right? We even had a question on dating. That's probably why you even had that question. Why are we talking about dating? Well, that's part of you. Your dating life is going to affect your day trading. Yes or no, Dennis? Tell me if
it all affects it. My mindset, and this is, something happening in your personal life, if it's negative, and you bring that into the trading, it will affect you. It will affect you. It's such a hard process. In 21 years, I still can't figure it out. You're having a bad day, like on a personal basis. Maybe your kid, gave you some trouble, or maybe you got some trouble at school or something. Maybe, maybe it's your dating life, maybe it's something, but that will affect your trading. So it's hard to separate it, but you got to do as best you can to like manage. And life is just juggling balls. You're just juggling balls, all the different balls all the time. So, and as a business owner, it's going to be the same thing. You can have a struggling day at the business, and then you bring it home, and then that affects your family too. I mean, it's a tough work, the balance family life thing. And, a lot of us have, kids and family, and, I can have a bad day trading, and it's, and that can then affect, how I am at the end of the day, with my wife and my kids. So, you've got to try to like separate it as best you can, but you can never do it perfectly. So, it's just managing all your emotions, and, that's what life is. So, I love this webinar to be able to, get a feel for, everything, because trading is a psychological game as well.
Yeah. Really quick, last year, of course, we all know COVID. So I interviewed dozens of business owners. We actually lost 70% of our clients last year because everyone ran for the hills. And the biggest trend, or the biggest pattern that we saw, was the business owners that were positive, had the positive mindset. Yes, they were struggling with their business, but they knew they were going to come out of it. They knew that they weren't alone. They were the ones that succeeded, and they're the ones that found the blue ocean within their own industry and jumped and became extremely successful. So that was a huge pattern that we saw last year. Was the clients that we would interview live on Facebook, they were the ones who were optimistic. They were the ones who actually opened a new business. They're the one who reinvested in their business, who continued on with their marketing plan, who believed that it was going to work. They did the strategies, and they were the ones who ended up, being extremely successful. So that is the pattern that I saw last year with all of our clients. Not only did I see it with my clients, but I also saw it with other marketers' clients as well. The ones that had that smile, that energy, that belief that, hey, everything is going to be okay. Those are the ones who succeeded. And hence, that's why we are still here as marketers, because as Cox Marketing Agency, is because we were able to, hold on to those clients and actually help them scale their business. So I think mindset is incredible. And it's one of the reasons why I love Katiana so much, because it is really about mindset, and mindset is extremely important, especially when you're ready to scale, because you know what, the universe is going to test you. Your car is going to break down. Your air fryer at your restaurant is going to to break.
Your co-host is going to have a brand new baby on the day.
Co-host is going to have a brand new baby. It's just life challenging you. I mean, I have one of my partners, she is going through a lot of challenges right now. And I'm like, it's just life showing you that you are scaling your business, because she is doing so much more revenue this year within from January to January to July. She has made more money than she has made last year all year. So that was a huge comparison for her. And mindset is truly, truly key, no matter what you're doing, either day trading, long-term trading, marketing, holistic, within your life. So whatever it is, I mean, it's truly incredible. That mindset is really fundamental.
Isis, do you want to add anything to that? Because I know that's your area right there.
Yes. Again, we go back to abundance. What was the question again? I'm sorry. I was listening to her and I kind of got lost a little bit.
No, you're fine. We were just having a conversation because someone mentioned in the comments, they were like, oh, we're confused. Are we talking trading, or are we talking dating? And we're like, we're talking all of it, because it's all one picture. Yes. So Juliana was saying about mindset. So I just wanted to see if you want to add something.
Exactly. At the end of the day, the mindset should be abundance. If you think of abundance, it's everywhere. It's in everything, and it's everywhere. I used to tell my friend, I had a friend, and she would always complain about money sometime. And I said, there's no money problem. There's money. There's plenty of money. It's just not in your pocket. I said, your only problem is figure out how to get it from where it's at and get it into your pocketbook. That's it. But there's money. So having a mindset of abundance, that it's already there. You just have to, again, it's like, it's not really a game. It's not a game in terms, like, if you use the word game, like there's some tricks to it. There's no tricks to it. It's just, you play with the currency, you play with the energy. What is it that you want? Who you are gets into it. Again, I'm going to keep saying that again. What do you want? You can bring anything in your life that you want, but you have to want it enough, and you have to know that you want it. Most people don't even know what they want. So then they go into this problem where they think they want something and they think they can't get it. They don't have access to it. When in actuality, it's because they're not clear about it. You have to get very clear about what it is that you want. And behind that is the psychology is, why do you want it? You know, do you value it? Why do you value it? All of that, if you can answer that to yourself, then it's already yours. But you'll get into issues when personally you can't answer these questions. You don't know what you want, why you want it. Then you find that it's difficult to get it.
Gotcha. So it's getting a little late. It's 8:50-ish. It's 8:49, 8:50. Okay. If any of you guys on the panel, because I know Juliana, you have a family to go back to, Dennis, you have your little ones to go back to, Isis, right? If you guys need to go, just let me know. And, you know, but I'm here. If the audience wants to keep going, I want to keep having the conversation, but just don't feel like you have to be here. Okay. So if you got to go, just let me know. Okay. Okay.
Yeah. I mean, 9 o'clock for me would be good.
Okay. 9 o'clock. So we got about another 10 minutes. Okay. Awesome. So
Katiana, you went on mute.
Sorry. Okay. Someone says, I have equity in building apartments. How can I invest to make it grow and multiply? Can anybody take a crack at that? Are you talking about the equity in the actual apartments? That's probably what they mean.
Well, it depends. You know, you have something called a 1031 exchange. So if you have money that you're able to take out of your apartments, you definitely want to minimize your tax liability in that, and you definitely want to be able to put it into something else that's going to assist. But that goes back to really what's your investment objective for doing it. Do you want to take out money to acquire more apartment complexes? Do you want to take out money to acquire something within the space that's a little less of you to think of, like example, maybe a REIT or something like that? You know, you can do a 1031 exchange from monies that you make from actual real estate and put it into something like a Braemar purchase that may earn you 8% annually on your money. And because you're switching it in that manner and you did a 1031 exchange, you're not having to have a tax consequence when you're doing it. So it depends on you and your objective for doing it, for sure.
Thank you. Can everybody on the panel please put your contact information in the chat? I have someone asking for it. Okay, everybody put your contact information in the chat. So while you guys are doing that, I just saw another real estate question from Cynthia. She says, do you assess that real estate will suffer a slight crash as supply is low and material and goods prices rises? Also, how will the moratorium on evictions hurt the economy? Anybody want to take a crack at that? Nobody here is really in the real estate, okay? So with any type of investments, and that goes back to what Joel was saying earlier, right? You cannot predict the market. Okay, so many beginner traders, so many beginner investors, right? The very definition, guys, of investing is taking a risk, right? Because if we knew what was going to happen, we would just put our money, just like a savings account. If you put $10,000 in a savings account, you know that tomorrow that $10,000 is going to be there, unless somebody steals it, right? That's another story, right? If you put $20,000, you know that it's guaranteed to be there. But that's not called an investment, right? That is called a savings account. The very definition of investing is taking on some risk. So when you're investing, there's always some sort of unknown. All right. And so to say things like, do you think that the market's going to crash? Do you think that the real estate market's going to crash? Do you think that this is going to happen? It really doesn't. What we know that we can do is manage our risk. So I'm going to direct this question to Dennis. What are some things you do to manage your risk with your day trading?
I can actually answer the question too. I was actually going to take the question just with the real estate bubble.
Okay,
because
yes,
a lot of
please.
people, yeah, a lot of, and I'm just going to just generalize it, but what really is driving, the real estate bubble to a certain extent and driving it high is input costs. So you have build costs, and I'm actually going through the process of building a house right now. So I can tell you firsthand that, the prices that, are going into a house, where there be lumber, steel, concrete, whatever it is, it's all, escalated significantly here since COVID started. So as you see building costs increase, that's the real long-term driver of the real estate prices. Because some people say, how can that house be worth $300,000? It all comes back to, what's it cost to build? And right now, the cost to build has never been higher. And that's really where the driver really comes for the real estate market, at least the residential real estate market, because it's difficult to even get materials. So you're, like for my electrician who's coming in was buying the copper wire, the roll of copper wire was $100 last year. He's like, it's $230 now. So it's went up. Inflation is an issue, and whether we want to believe it's transitory or not, that the Fed's feeding us that is still to be determined. But it seems like it's here now, and it's a lot higher than what they act like when they say it's 4 or 5%. So I mean, building costs have risen dramatically, and that's going to continue to keep real estate prices escalated. I don't think there's a pending. A lot of people have been calling for a housing bubble to burst and housing prices are going to fall 40-50%, but it's difficult to do that if the building costs stay high, because it's going to be for somebody coming in and saying, oh, do I build or do I buy? Well, they're going to look and analyze, if I can buy this house for $700,000, it cost me $1 million to build it, then I'll go buy the $700,000 house. So for that house to fall to $500,000, the building costs have to come down. So that's really what is the driver for the real estate, at least in the residential. It's building costs, and they're really high. And I don't know if they're going to be coming down. It's, you think about how much deflation you really see. So lumber price, the futures came down, but there's a lot of other inputs that go in, and labor is going up, and there's a lot of other things going up, and that's the real driver. So I don't know if I see this big real estate crash coming.
Interesting.
Different aspect from the day trader. So no, not much expertise there, but that's just my opinion.
No, that was a good input. I do have while you're speaking, Jerusha says, I have a question for Dennis. As a day trader, you're working for yourself. So how do you find balance? Because you don't have sick days or vacation days per se. So how do you find your balance?
I think everybody can answer that on the panel probably. As a business owner, as a small business owner, you probably, have less, sick days than I could as a trader. I mean, if I just don't trade, I don't make money, but it's not like I have, a lot of fixed expenditures. I used to own a sub shop years ago, and that's where I took no sick days, was because, if your employee calls in sick, well, you're going in. So, a small business owner probably knows this better than even me about sick days, but you try to balance it as much as you can. I mean, family, life, work life, that's what we're all trying to balance through, through a life. My wife would love me to take more days off, but at the same time, we've got bills to pay. So, you try to balance it as best you can. You have to give yourself some time to refresh. It's important, like Isis was even saying, it's important to invest in yourself. So you've got to take some time to refresh yourself, and whether that be a vacation or whether it be, going out for a nice dinner, you have to put that time in. If you're just sitting at your screen and constantly thinking, and you're constantly, looking at the next thing to trade, because there's 24-hour markets, and you can be trading 24 hours a day. But if you're doing that, a lot of your other aspects of your life might suffer. So you do have to balance it. I try to stick to a schedule where, I've always got a certain hours blocked off for my kids and for my family. And I try to put them first. So, I'll trade, but remember, it's all about, life is still about relationships. And, yes, you can have a relationship with the market, and sometimes that can be very satisfying, but still the most satisfying relationships are with your family. So I always try to put my family first. And if I've got the time, I always try to give it to that. Just like when I was saying, when we were scheduling, for this call here tonight, I was like, oh, well, my wife wanted to go out, and she had a previous commitment where she was going to go out and see some friends. So I was like, okay, I can come on, but I can't come till 8 because I got to get the kids to bed first. So it's all about balance, and I think, family is still the number one thing in my life.
Absolutely. Going back to what Isis said, you have to know what you want. And Dennis knows that family is what he wants. So definitely starting with that. Isis, I know you're going to have to go soon. You want to say any last words or even piggyback off of what Dennis was saying?
Yes, that basically at the end of the day, I mean, life is everything. All of these numbers we're talking about, that's great. But at the end of the day, it's, who you are, how do you see yourself in the world, in the universe? You're a child of the universe. You want to live happy. You have, a great life. Money is certainly part of it, but it's so much more to life than just money. So you want to have access to all of that. That's actually free. That's like, sunshine, air that you breathe, relationships, the community, how you relate to other people, what they feed to your souls. This is really what feeds you as a human being. This is what you take in. This is what gives you pleasure. This is what makes you want to live life. This is what makes you robust. And you want to spend more time, cultivating those relationships, cultivating those things more than anything else. Thank you.
Thank you. Thank you. And you feel free to just, exit whenever you want. If you want to stay longer, it's up to you, right? But I really thank you for being here. You were amazing, and I can't wait to continue working with you.
Thank you. Luck to everyone for your audience, and thanks for all the panelists as well. Thank you.
Thank you. Bye-bye. Awesome. Is everybody good for maybe another 5 minutes or so?
I could stick for a few minutes, yeah.
For a few minutes. Okay, awesome. I think Sharika was over here answering. Okay, this is what happens when you work together, guys. This is what happens. Sharika's tag teaming. She's going in there, and I don't have to worry about it. This is the beauty of it. Okay, there were some questions. 1 second. Sorry, I gotta scroll through the comments here. There was something. Oh, Katiana. Oh, this is for me. All right, Katiana, how do you choose a coach and know that this is the right one for you? Okay, I'm actually gonna direct that to the whole panel, and then I'll answer it. So we'll start with Juliana. Go ahead, take a crack at it.
It's about relationships. It's about how you feel and how you connect with your potential coach. I have paid a lot of money for my own coaches to not only help me with my mindset, but also help me with my own business strategy. I mean, I help business owners do the same thing, but I can't do it for myself, which is kind of bizarre. So whenever you resonate with someone who aligns with your same values and understands you as a personal person and not just a number or not just a sale, that is really important for that connection to happen. And I mean, there's, especially with social media, you have so much information out there, so much opportunities and so many different coaches. I mean, there are ads out there, there are organic reach that people do. For example, one of the coaches that I paid over $5,000 for, I thought about it. I'm like, man, he aligns with me. He understands what, I'm looking for. Like there was a lot of things that we were seeing eye to eye. Of course, he was, he had a sales team pitching me, but I kept looking at, what exactly he was able to offer, right? So same thing with your advisors. You want to make sure that your advisor is providing that same type of momentum that you want. Okay. So essentially, we go on a date, right? We go on a discovery call and we understand each other a little bit more. So I am someone who sleeps on things. I like to make decisions, especially if it costs so much money. And you want to make sure that you are aligned with that person, because you don't want to go into something and spend so much money and then have FOMO and then just leave all of a sudden. So having that third sense, that sensibility that this person is really understanding you is going to be really helpful. This can happen across all different things in life. I mean, I do this with the schools that I pick out for my kids. I do this for, believe it or not, picking funeral arrangements for, for my loved ones, because we want to make sure that it is aligned for who you are as a person. And picking the right coach for your business, it doesn't matter how much money you invest in it. Because at the end of the day, the value that you get, the understanding that you get, for example, our coaching programs, they are expensive, but the transformation and the change that people get just through, let's say, 12 coaching sessions, or the ones that I have taken that are either 3 to 6 months, is phenomenal in the growth of your business. And that really shows in not only the return on investment in yourself, but the return on investment in your pocketbook. We have seen transformation with like, for example, with our clients, that originally she started off with like a bun, she was unsure, she was crying. And then as the sessions went on, she was doing her makeup a little more. She was doing her hair. She had roses in the back because her husband bought her roses. And those transformations are really incredible because you are investing in yourself and you are understanding where your life needs to be aligned to. And that really shows not only in your pocketbook, but it shows in yourself. It really shows in your body, your holistic wellness. So I think going through that relationship is really important.
Absolutely, absolutely. Dennis, you want to take a crack at it? Because I see Sharika is she's typing over there. She must be answering somebody's question. So you want to take a crack at it? How do you find a good coach or someone to work with?
I think at Benzinga, we've just got a good team. So, I mean, we went through, a lot of different people to find the team that we have. I think you just got to find, somebody that works for you, somebody that can help. And Joel, who was on here before, was probably been my trading coach. When I first started, he was the manager of the Bright trading office. And, and I was a young kid coming out of university at 22 years old, didn't know much. And he had come from the trading floor. He had had 13 years of prior trading experience. So, you're trying to find somebody that's got experience in a field that you're, interested in. And, and you got to find somebody that, that you're comfortable with. I mean, you can have the best coach in the world, but if you can't relate to them, it's probably not going to be a fit. So you got to find, somebody that's got the skill set that you're looking for, but also somebody that you can relate to, even on a personal level. So, and I mean, it's lots of, obviously, like we were saying with social media, there's so many different connections you can make. So even if you're like into trading, we can relate this back to trading, and you're looking, how do I find somebody, that I'm right for? Where do I find the right place? I mean, there's lots of different places. I mean, Jeremy Newsom, who is going to put this together, really, is not just a good trader, but he's just a good person as well. And, it's why, when I met Jeremy probably 3 or 4 years ago now, just through Twitter, I mean, it's a great connection. I learned from Jeremy so many other things, not just trading skills, but other aspects of life as well. And I catch myself watching different little and Jeremy, and the one thing with Jeremy is he'll throw you on just like a 30-second clip on Twitter, just as something he was just thinking about. He was talking, and you're like, wow, it's something that really helped you. And the positive aspects, like Jeremy's always so positive. Now obviously, he can't be here tonight. But he's so positive in everything that he does, just learning that positivity, because I tend to, as a risk manager and a risk adverse trader, I tend to look at, even life sometimes, what's the risk? You kind of can sometimes start focusing on what's the negative here. And, and it's important to, try to spin that and try to, make it a positive. So, just going through and, I've taken a long tangent from coaching, but you've got to find somebody that's got the skill set you want and somebody you can relate to.
Exactly. And to piggyback off of that, because you and I have something in common, Dennis. We both had Jeremy as a coach. And it's funny because when I first started trading, this was back when I think Jeremy had just started around 2013-ish. That's when I started. And And to be honest with you, I couldn't relate to anybody, right? Most of the people that were doing this did not look like me. And it's the elephant in the room, but most people on Wall Street don't look like me. And one of the things I loved about Jeremy, he made me feel welcome, right?
Yeah.
He didn't make me feel like, oh, you don't belong here, or he just made it like to the point where I could understand what he was saying. And that's why 7 years later, here we are, or what is that, 8 years later, here we are doing a webinar together. Yes, he couldn't be here because of his brand new son who just made it to the world today. But the fact that we're still able to maintain that relationship, that tells you everything. So, just to sum it all up, right? It goes back to, who do you relate to, right? Like Juliana says, the price doesn't matter. The cost doesn't matter. It matters, who do you align with, right? Who does your energy align with? Who makes you feel comfortable? Who doesn't make you feel like you're dumb or that, you don't belong here? So yes, that was my experience with Jeremy. All right, beautiful. So I think we kind of got every question. Any last strangling questions? While you guys are putting in your last strangling, I'm going to have everybody close with their last words. Whoever wants to go first to close and say your last piece, and we're going to wrap this up.
Sorry, I was just like going through and reading all the questions. You guys had some really, really good questions, and I saw that we were getting backed up, and I didn't want to miss out on at least giving you some of those answers that you guys were looking for. But for my close, definitely, I put my information down in the chat. Anybody can reach out to me. I like Katiana, so you guys can hit me on the hip. I gave you my cell phone number, so you can shoot me a text if you have questions. I love to make myself available. No question is a bad question. Reach out to me. I'm definitely somebody who will steer you in the right direction. It doesn't have to be with me. It can just be you asking me questions on how it is that you can find somebody that you think is going to work for you, for sure. If you have any other questions regarding investing, if you want to do a financial review or kind of see where you are, definitely reach out to me. I have my phone number and my email in the chat, and I look forward to talking with you guys individually. And thank you so much for having me and including me on this, Katiana.
Thank you for helping me tag team these questions, and thank you for being here. It was a pleasure having you here. I look forward to working with you in the future, and go kill it, girl. Go make that money.
Pleasure to meet you, Sharika. Pleasure to meet you.
Definitely. I definitely want to catch up with the panelists too, for sure.
And we have each other's emails, so yes.
I'll just say, so I'll go if you want, and then I can Juliana go at the end there. So if you're interested in learning more about short-term aspects of trading, we do have a daily podcast completely free. It's Benzinga's Pre-Market Prep. So if you just Google Pre-Market Prep Benzinga, you'll find us very quickly. We've got a good group. It's a good chat room. We get a lot of people coming in there every day. We're Monday through Friday, 8 a.m. to 9 a.m. We're talking stocks, we're talking the economy. It's more focused on short-term trading though. It's different trading ideas. We're trying to generate different trading ideas. What's moving today? Why is it moving? How are we, approaching the market today? So that's kind of what we do. And then if you're interested in professional trading, stocktrading.com is the company that I've traded with for 21 years. It's Bright Trading, stocktrading.com.
Thank you so much, Dennis, for being here. Even though you've got the kids, you made it happen.
They're sleeping now, so we're good. At least I think they're sleeping. I might go up there and they might be having a party. So
yeah, I used to be that age. They're probably having a party.
They're probably having a party. Although I haven't heard them, so I think they're sleeping.
Yes. Or maybe a party in their dreams.
Yeah, thanks so much for having me, Katiana. You did a wonderful job hosting this. And I know without Jeremy, it was a little bit of pressure there, but you did an excellent job. Everything was very smooth. So thank you so much, Juliana. Pleasure to meet you as well.
All right. Thank you, Dennis. Have a good day. Bye-bye. Juliana, take it away. Say your last word.
Yes, I actually have a giveaway for the support that's, happening for this fundraiser. So what we're giving away is for those people who are in the corporate world or even business owners, we are doing LinkedIn profile optimizations. Of course, you know, people are looking for Sharika, people are looking for Katiana, people are looking for you, and people want to know more about you. So what's going to happen in the world of, you know, professionalism? People are going to start creeping you, and people are going to start Googling you, and the number one search result is usually LinkedIn. And the great thing about LinkedIn is that it is a professional platform. And what we're doing at Cox Marketing Agency is we are completely offering for free. It's $365 value to go ahead and optimize your LinkedIn profile. LinkedIn profiles usually fall within the 40% social selling index range. We bring our clients to the top 5%. Our average clients are actually at the top 2% of LinkedIn after the profile is optimized. So if you want to go ahead and be part of the raffle, I'm going to be emailing whoever wins tomorrow morning or tomorrow afternoon, I'm sorry. And I'm going to drop the link in here. So if you want to get your profile optimized on LinkedIn so you can, you know, show up as the professional person on there, as the professional guru, either be the financial advisor or be whoever you are in life. And I always say, and I've learned this from my mom, she's always said, if you're going to be anyone in this world, if you're going to be a cleaning lady, if you're going to be financial advisor, if you're going to be a teacher, an astronaut, a bus driver, whatever it is, make sure that you are the best. Okay. And in order to be the best, okay, you need to work with someone who knows how to do these things. Okay. So put yourself out there. People are going to search for you. I mean, someone was already asking for, his Twitter account. Okay. People are on social media. People want to know where you are, especially nowadays in the world. And then I have another oh, and the bonus for that is that you have 30 minutes with me personally, and we will do a session to understand what you should be doing on LinkedIn. Okay, so I'm going to be giving you a lot of strategies. LinkedIn is a relational platform. You're not supposed to be spamming people. It is a relationship platform. So we're going to be going ahead and give you a strategy on how you need to be on LinkedIn completely for free. Now, for those of you who are business owners and do not know where to go in your business, you do not know how to connect the dots when it comes to your marketing strategy, we offer what we call a digital blueprint. We look at what your business looks like in the world right now, like if someone was search for you. And then we also look at your competitors, and we analyze where your competitors are doing. We take the good things about, you know, what the competitors are doing for their own business, and we implement strategies from that. In addition to that, we give you a roadmap as to where your branding needs to be, what are the next steps for your business, and how you scale your business. And that is a great opportunity for you to stop guessing what to do in the online world. So it's going to stop a lot of the guessing. You don't need to YouTube things or Google things, how to market your business, because there's a billion strategies for your business. And small business owners, franchises, and corporations have completely different strategies. So if you're a small business owner, we're definitely here to help you out with your marketing plan, with your marketing strategy. And this includes a 60-minute session to review the report. The report is usually anywhere between 40 and 70 pages long, depending on how big your business is. And then, we sit down one-on-one and we discuss as to what are the opportunities for your business to move forward in order to scale. So I'm going to drop the link right here. And this is all for the goodness of this fundraiser. And I'm very excited. We thank you for your support and whatever donations that you're able to do. We are, here to help. And I'm sure Katiana, I'm sure you have some closing remarks here now, but, of course, if anyone can donate whatever they can, it'll be really incredible to help a child, help a family, help Haiti, especially after this terrible earthquake. I mean, it happened a couple of weeks ago, but people are still suffering. People still don't have homes. Kids still don't have school supplies for school. So it is really important that whatever you can give is going to go a long way.
Beautiful. Thank you so much for that. So if you want to bid on a Juliana's package, right? All the small business owners in the room and also the professionals in the room, right? You can actually, we're moving into the gig economy, right? The traditional, 9 to 5, W-2, you clock in, you clock out, and you have a salary. That's actually evolving to where companies are starting to work with independent contractors. It's a lot cheaper for them, right? And they don't have to pay you all these benefits and everything, and it still gets the job done. So you as a professional who has been in your career for years and years and years, you can market yourself as an independent contractor to other organizations and offer your expertise. So definitely you can benefit from Juliana's services. So if you are interested in bidding on that, right? We're going to start the bidding at $100 for that package because it is over, what'd you say, about like 300 plus another 300. Yes. Yeah, you are muted. What'd you say?
All right. Yes, it is valid at 365 just for the optimization, but we're also including a 30-minute session to be included. So you can know the right strategy, because I mean, we can build it, we can do it for you, but if you don't know what are the next steps, then you're going to lose out on a lot of potential conversations that you could be having.
Right. So you definitely, we're going to start the bidding. If you want to bid for that, just go ahead and text my number. It's right here on my name, 954. I'm going to put it in the chat. You're going to text my phone, 954-918-5117. You're going to text my phone and you're going to text me Juliana or YU. Okay, I'll know exactly what you mean. So that I know on your donation, when I see your donation, I know that you're bidding for that. So we're going to start the bid at $100. So if you're the only one who bid for it and you paid $100, you just got $600 worth of value for just $100. All right. Now, if someone paid a little bit more than you, they paid 110. I'm so sorry. You gotta come in higher. Okay. So we will announce the winner. We're going to keep it open. I know Juliana said tomorrow, but I want to keep this open because, tonight is just the beginning, guys. Haiti needs our help. We are here to do long-term solutions. This is not one of those fundraisers where everybody jumps in and it's hot. You take a picture. Ooh, I just donated. Let me write it on my Facebook so I can show off to all my friends, and then no one cares anymore. That's not what we're here for. We're actually here to make a difference, to build a local economy so that when this happens, that we're ready. Because I do believe that Haiti will change. There are many countries in Africa who are in the same situations as Haiti, and now they are thriving economies, like Botswana, like Rwanda, like I'm missing Ghana, right? Like Kenya. These are countries that are similar to Haiti, but they're doing a lot better. Why? Because they have resources. They educate their people on how to use these resources, and that's what we are here to do. Okay. All right. So true to fashion, I am going to auction off something as well. Okay. I am going to auction off 3 sessions with me. 3 sessions. So what do we do in these sessions? We start with your goal. All right. We quantify your goal. We know exactly, okay, Kat, I need money for retirement. Kat, I want to go, back to my country and live like a queen. How much is that going to take? Kat, I want to put my child through college. Kat, I want to buy a new home. Kat, I want to do this. Kat, I want to be a day trader. Whatever it is, we're going to quantify it. The second session, we're going to talk about different strategies to get you to your goal. And in the third session, we put it all together and we get you started. Okay. So type in a 1 if you guys would be interested in something like that. Type in a 1. I know some of you guys left, but there's somebody in the chat. Anybody want 3 sessions with me? Anyone? Type in a 1. Let's see. We got Oceani. We got, she typed in a 2. So she wants 2 of those, right? All right. We got Barbara Jerusha. Okay. So I'm going to start the bidding. 3 hours with me. How much do you think 3 hours with me is? How much 3 hours with me is? Let's see. Whoever gets it wins. No, I'm kidding. No, you got to donate to win. How much do you think? Well, the value of 3 hours with me is typically $750. Okay. But I am starting the bidding at $100. I am willing to sit down with you for 3 hours, 3 different hours. We're not going to do 3 hours straight, right? I got to give you some homework. I got to make you get your hands dirty. I got to do all of that. Okay. So we're going to start the bidding at $100. If you're interested in that, text me from the same number, and you're going to put Kat, K-A-T on there. You're going to put Kat, and I'm going to look at your donation and everybody else who donated, and the one with the highest donation will win 3 hours with me. Okay. All right. And that's pretty much it. Thank you everybody for showing up. Thank you for those who donated, even if all you donated was $1, because hey, $1 can buy somebody a beer. Okay. Because times are rough. You need a beer sometimes. All right. No, I'm just kidding. You can get water. You can get a lot of things with $1. Okay. Not just the beer. I was just kidding. Okay. All right. Thank you everybody. Wilnie just sent her email. So that means she's ready to win something, right? Just text me, Kat. All right, the number's right there, 954-918-5117. 954-918-5117. Okay. If you registered for this webinar, you will receive the recording, right? Those of you, if you have friends and family that you invited and they couldn't make it, they can watch the recording, pause, replay, repeat, take notes, whatever you got to do. Okay. Thank you so much. You stayed till the end. I thought you were going to leave. You stayed till the end. Thank you so much, everybody. Thank you, everybody. Have a good night. I'm going to leave it on so you guys can get the number. And let me put the link one last time. Any last words, Juliana, before we go? Any last words? Click on
I just wanted to thank you for advocating for Haiti. We've done a couple of charitable donations and fundraisers in our agency, and seeing this, I mean, that always tugs my heart because it is really important to see these children, these families united and actually, being fed and housed, and the education is so important. We live in a bubble here in the United States. We live, we have everything. I have a fridge full of food, they don't have that in Haiti. I have, I was able to buy my kids' supplies, for school. They don't have that in Haiti. And whatever money that these people or your audience can give is going to be significantly greater over there. I mean, even used pencils, I mean, it's huge. Like I remember we did, there was an orphanage in Haiti that we worked on, and little things like balloons made a huge difference in the lives of kids. And I don't know if anyone knows, but to get these donations to Haiti is really, really difficult. I know for a fact that they have to go escorted, right, from the airport. They need to be escorted to whatever town or city that they're in. And we don't think about how difficult it is to get the supplies there or send the help over there, because people are desperate, like we sent, I was telling Katiana that we sent to the orphanage, we sent chickens to lay eggs for the orphans, and they stole the chickens. And then Katiana was telling me, she's like, well, the person who stole the chickens probably needed it as well. So it's kind of like a cycle, and they truly value whatever they get over there, because getting something from the United States, even if it's like oatmeal or even if it's chickens or eggs, it's really, really incredible for them. Absolutely. And getting books is like, even if they're outdated, a couple years old, is still education for them. And I've seen the videos, I've seen the pictures of what Katiana's mom does, and it's really, really beautiful. So I hope it tugs your heart. I hope you're able to help a child in need. I hope you're helpful for a family in need, because they really, really need it. So that's why we were here 2.5 hours doing this and
still going.
Yeah, for sure.
Still going, but I'm gonna have to go. I'm sorry to cut you off, but I gotta go too. And these lights here, because I have like the perfect lighting, is killing my eyes. So I'm gonna have to go soon. Thank you so much, Juliana. Thank you, everybody. Thank you for all of those who donated. Stay tuned. We're not done. We are gonna keep it rolling. Oh, I forgot to say that Sharika just texted me and she wants to raffle off 1 hour. I think she said 1 hour. Let me not overpromise. Let's just say 45 minutes. Okay. 45 minutes with her. I think she just said, keep it open. 45 minutes with her, Sharika. For those of you who don't know, right, she is a financial advisor. You can ask her questions about life. If somebody had a question about life insurance, you could definitely ask her about that. You can ask her about IPOs, right? You can ask her about having a managed portfolio. So 45 minutes with her. We're going to start the bid around $100 as well, because Sharika, you think I'm expensive. All right. Sharika's a lot more expensive than I am. So we're going to auction off an hour with her. We're going to start the bid at 100. So if you would like either Juliana, Katiana, me, Kat, K-A-T, or Sharika, you could just put Shari, just text that number to me and I will look at your donation and see which one had the highest. Okay. Now this is going to keep going for the whole week. So don't worry if you didn't catch it. We're going to post it all in your face all day long. Okay. All right. Thank you, Juliana. Thank you, everybody. Have a good night. Bye.
Bye.
Bye, everybody. Bye-bye.